Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, Salam Kebajikan. Her Excellency Sri Mulyani Indrawati, Minister of Finance of the Republic of Indonesia, His Excellency Sami Al-Suwailam, Director General of the Islamic Development Bank Institute, Excellencies, distinguished guests, ladies and gentlemen. Peace, God's mercy and blessings be upon you. Alhamdulillah, all praise be to Allah, the All-Beneficent, by whose grace and blessings have enabled us to gather here today for the 5th Annual Islamic Finance Conference, the role of Islamic finance in promoting economic recovery, enhancing productivity, financial stability, sustainable and inclusive growth. First of all, it is an honor to be your Master of Ceremonies for this conference. My name is Trisminda.
And I'm Lisa.
We would like to thank you for making time in your busy schedules to join us today.
On behalf of the organizing committee, that is the Ministry of Finance of the Republic of Indonesia, in collaboration with Islamic Development Bank, Universitas Indonesia, Ikatan Ahli Ekonomi Islam, Komite Nasional Ekonomi dan Keuangan Syariah, World Bank, Asian Development Bank, IMF, and Masyarakat Ekonomi Syariah, we wish to extend our warmest welcome to you all, Excellencies, distinguished guests, foreign and local participants, to this virtual AIFC 2021. Excellencies, distinguished guests, ladies and gentlemen, the Annual Islamic Finance Conference, or AIFC, is a flagship event held by the Ministry of Finance of Indonesia that brings together policymakers, economists, academics, and the private sector to discuss various keys in Islamic economy and finance and related development issues. Previously, the AIFC was held in Jakarta in 2016, Yogyakarta in 2017, Makassar in 2018, and Surabaya in 2019. While we regret that the COVID pandemic prevented us from holding the conference in 2020, we are excited about the opportunities of holding an innovative virtual conference of AIFC in 2021. Nevertheless, we hope we have managed to put together an interesting program and look forward to your participation.
Excellencies, distinguished guests, ladies and gentlemen, the Indonesian government has the honor of assuming the important responsibility as host of G20 presidency next year. Over the following 2 days, the 5th AIFC aims to promote discussion on an interesting topic that has already become a global interest: economic recovery after COVID-19. We would like to bring added value to this conference as this topic reflects the theme of the G20 Indonesia Presidency 2022, namely Recover Together, Recover Stronger. We hope all participants will be able to elaborate and explore the critical role and the involvement of the Islamic economy and finance during the pandemic, along with guest speakers, guest lecturers, and prominent speakers presenting their point of view on the theme. Excellencies, distinguished guests, ladies and gentlemen, for a brief moment, we would like to request every one of you to rise for the national anthem, Indonesia Raya.
You may all be seated now. Excellencies, distinguished guests, ladies and gentlemen, before commencing the seminar, we will listen to the recitation of the Holy Quran by Bapak Muhammad Siddiq.
الله الذي خلقكم ثم رزقكم ثم يميتكم ثم يحييكم هل من شركائكم من يفعل من ذلكم من شيء سبحانه وتعالى عما يشركون صدق الله العظيم. السلام عليكم ورحمة الله وبركاته.
Thank you, Bapak Muhammad Siddiq. May Allah always give us guidance and help. Amen. Excellencies, distinguished guests, ladies and gentlemen, today's conference will have three parts. First, we will hear how Islamic social finance played a critical role in the economy during the pandemic from a series of eminent keynote speakers.
Second, we will be learning about global recovery of COVID-19 pandemic, especially in terms of Islamic economy, Sharia financial policies and strategies from our guest lecturer, Ibu Mari Elka Pangestu. That will be followed by a deep dive into topics of implemented policies and actions and strategies in maintaining human capital and effort in economic recovery and Enhancing Productivity in a panel session led by chair discussion.
All sessions are available in both English and Bahasa Indonesia. You can also access simultaneous interpretation in Bahasa Indonesia from the globe button at the bottom of your Zoom window. At the end of the panel session, we will have a short break for Duhur prayer at 12 Jakarta time, but allow us to inform you that not long after that, we are going to have a presentation of the top 12 papers from our Call for Paper event with Universitas Indonesia. So if you are interested, you are more than welcome to register to any session you prefer afterwards.
Excellencies, distinguished guests, ladies and gentlemen, to begin with, we would like to invite Bapak Febrio Kacaribu, the head of Fiscal Policy Agency of Ministry of Finance of the Republic of Indonesia, to deliver his welcome remarks. Ladies and gentlemen, please welcome Bapak Febrio Kacaribu.
Her Excellency Dr. Sri Mulyani Indrawati, Finance Minister of the Republic of Indonesia, Honorable Dr. Sami Al-Suwailin, Director General of the Islamic Development Bank Institute, on behalf of the President of Islamic Development Group, Honorable Professor Mari Elka Pangestu, Managing Director of Development Policy and Partnerships in the World Bank. Just to name a few of our friends from all over the world, Professor Kabir Hasan of University of New Orleans, Professor Mansur Ibrahim from Malaysia, and also my special guest, Ministry of International Affairs of Saudi Arabia, my dear friend, Mr. Riyad Al-Karif. All speakers, distinguished guests, our friends from Islamic Development Bank, Komite Nasional Ekonomi dan Keuangan Syariah, KNEKS, Masyarakat Ekonomi Syariah, MES, Ikatan Ahli Ekonomi Islam Indonesia, IAI, and especially to the committee and distinguished guests, ladies and gentlemen. Good morning. Assalamualaikum warahmatullahi wabarakatuh. It is a big pleasure for me to welcome all of you to the 5th Annual Islamic Finance Conference. The role of Islamic finance in promoting economic recovery, enhancing productivity, financial stability, sustainable and inclusive growth. Distinguished participants, ladies and gentlemen, Bu Menteri, the 5th Annual Islamic Finance Conference is an annual series of events that bring together a wide nuance of stakeholders, policymakers, professionals, economists, academics, and private sectors to discuss various strategic issues of the Islamic finance, economic, and development issues all over the world. This conference is also a flagship agenda of Fiscal Policy Agency, Ministry of Finance of Republic of Indonesia, to support the Islamic finance development in Indonesia. This year's conference in particular holds very strategic values for us, as it is also coinciding with the formulation of the Financial Sector Omnibus Law. Thus, this discourse, knowledge, and information will be a very constructive input for us for formulating policies to strengthen and develop Islamic finance in Indonesia. This year, we bring forward an important theme on how Islamic finance having a big potential role in promoting and accelerating economic recovery that is directed to strengthen the economic structure through enhancing productivity and also maintaining sustainability and inclusivity. It is also in line with our Indonesia's G20 agenda, Indonesia's presidency in 2022, that is strong recovery and a sustainable, inclusive, and resilient future to have a better coverage of the outreach and interest of many stakeholders in Islamic finance and also policy making society. In parallel with this conference, we also conduct a call for paper event to harness valuable information and insights from the academics and also from practitioners to serve a source of references for stakeholders and policymakers, particularly in economy and Islamic finance area. Bu Menteri, distinguished participants, ladies and gentlemen, Islamic finance is a way a framework that governs assets and transactions based on fairness and sincereness. I hope the interpretation of these values will permeate into the process of the Islamic finance development, mainly in risk-sharing mechanism. We believe that Islamic finance continues its progress in designing and also developing better risk-sharing structures. Islamic finance can play a significant role in enhancing financial inclusion in countries with dominant Muslim population. For example, Islamic Social Fund has contributed in helping poor and marginal societies in many countries. A rapid development of technological innovation in Islamic finance and changing lifestyle due to pandemic has made us to explore and innovate a wide array on how to structure Islamic finance in fulfilling the needs of funding and financing for the economic activities. It is thus very critical to review legal, institutional developments, and technological advancement to develop a better trust, management, and governance in the Islamic finance itself. This review will help the convergence needed in progressing the Islamic finance, mainly through the equity-based financing. Distinguished participants, ladies and gentlemen, the Annual Islamic Finance Conference this year will be divided into 3 areas of discussion, namely sustainable and inclusive growth framework and application during the COVID-19 pandemic. The second, Islamic finance development during and beyond the pandemic. The third, Islamic finance role, participation, and potential as supporting element in sustainable and inclusive growth. In the first part of the discussion, we will see key issues will be discussed in terms of maintaining sustainable and inclusive growth, especially in the pandemic era. It will cover policies, frameworks, and experiences in managing COVID-19 socio-economic impact. It is expected that we will come up with various new knowledge and experience as well shared. As the pandemic has resulted in a deep and substantial consequences in a very wide aspect, it is important to capture the dynamic process in the government policy responses, including policy priorities to tackle the pandemic and structural reforms taken by governments. Second part, we will talk about Islamic finance updates and experience, policies, strategies in addressing Islamic finance stability amidst the COVID-19 pandemic and the way forward. How the factors of the environment, social, governance affecting Islamic finance and shape the way Islamic finance doing its business in the future. This part is very intriguing and pique our interest as Islamic finance has shown a robust growth during the crisis, especially in Indonesia. In the last session, we will discuss Islamic finance and ICT roles to support sustainable and inclusive growth, especially during the pandemic. The interconnectedness between digital technology and finance is one of the focus areas to be covered. This part highlights Islamic finance features, policies, and ICT potentials to support sustainable and inclusive growth. Last but not least, participants are also welcome to join the call for paper presentations. The call for paper presentation will present 12 best papers from academics and practitioners of Islamic finance from all over the world. I do believe it will provide us with a lot of knowledge and perspectives. Finally, distinguished participants, ladies and gentlemen, Bu Menteri, this event is a very strategic part of learning process for us in developing Islamic finance and hope that we can add more value to our future generations. I hope that the 5th AIFC will be a great momentum in conveying and amplifying Islamic finance roles in the global market. I look forward to have a great discussion in this event. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Bapak Febrio Kacaribu, for your welcome remarks. Excellencies, distinguished guests, ladies and gentlemen, moving right along, we are very much honored to invite Her Excellency, Minister of Finance of the Republic of Indonesia, to deliver a keynote speech. Ladies and gentlemen, please welcome Her Excellency, Minister Sri Mulyani Indrawati.
Terima Terima kasih. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Distinguished participants, ladies and gentlemen, I would like to first express my appreciation to the Honorable Dr. Sami Al-Suwailem, Director General of the Islamic Development Bank Institute. Also, Ibu Mari El Kapangestu, the Managing Director of Development Policy and Partnership in the World Bank. And I would like to also welcome all the distinguished speakers and also contributors to this very important and valuable occasion. I would like to also express my appreciation to BKF for conducting this Annual Islamic Finance Conference, or AIFC, for the 5th time. I think this is a very good occasion as well as tradition to be able to continue develop the thinking regarding the Islamic economy and finance. It is really my honor to be able to deliver the keynote speech on the role of Islamic finance in promoting economic recovery, enhancing productivity, financial stability, sustainable and inclusive growth. The topics that we are discussing today is in line with our roadmap to the 2022 Indonesia G20 presidency, which is already explained earlier by Pak Febrio, especially in optimizing the role of Islamic finance in the post-COVID-19 economy. I would like to thank the Islamic Development Bank, Komite Nasional Ekonomi and Keuangan Syariah, or KNEKS, Masyarakat Ekonomi Syariah, MES, Ikatan Ahli Ekonomi Islam Indonesia, IAEI, and all committee for organizing this annual conference. We are all understand that the basic tenets of Islamic finance is to connect the financial sector with the real side of the economy, and at the same time promoting a just, sustainable, and productive behavior. This is also one of the altruistic character in providing the safety net, especially for those who most vulnerable and need. I do believe that Islamic finance is a unique part and also very relevant ethical values for conducting the economic activity globally. It's always continue promoting a just, inclusive, and socially responsible system as well as conduct. I strongly believe that Islamic finance provide opportunity as well as support to our national economic recovery program by accelerating a socially responsible and productive investment in Indonesia. By this future, our economy will not only develop and creating prosperity for all, but also just and equitable. This will continue creating a sustainable society as well as economy. Ladies and gentlemen, we are all meeting in this very occasion still under the threat of pandemic COVID-19. The pandemic has struck globally, and Indonesia, not excluded, of course, have to adjust and responding to the threat of humanity, society, and economy. Alhamdulillah, at this very moment, we see a sign of recovery, but it is still very early to tell. We are now seeing the economic growth on the second quarter at 7.07%, which is a strong rebound comparing to the last year performance. But this is not a guarantee recovery and rebound. We have to continue recalibrating and reformulating our policy in order for us to be able to continue protecting people from the COVID, protecting people from their economic situation, which is significantly affected because of the COVID, and also to recover our economy. As we can see on the second quarter of this year, the recovery has been shown by all engines of growth, consumption and investment, which contribute more than 80% of our GDP, has also showing both recovery. Consumption grew by 5.9%, while investment grew by 7.5%. We also see a very strong rebound on export due to the global economic recovery. Export has been accelerated by 30%. So these are all a very good data showing that there is a recovery which is taking place, but this is still very early and need to be continued, nurtured, and maintained. We will use all the government policy, most importantly, of course, the government budget, in order for us to be able to continue protect the people, the most vulnerable, especially from the COVID, but also from the economic hardship. Ladies and gentlemen, it is stated in the opening of Indonesia Constitution that our country, our nation is based on one God Almighty. It means that Indonesia is not only recognize the role and the existing of religion, but Indonesia and Indonesia people practicing the religious as well as the belief in divinity value that will be implementing in their life and the conduct of the country. Islam as the religion with the largest population in Indonesia certainly will play an important role in shaping the value as well as the practice of running the country in order to achieve our common goal. The value of Islam, which is based on Maqasid Syariah, or the objective of Syariah, focus on how to protect one belief in Allah, ad-din, and to realize prosperity for society. That means we have to protect the life, intellectual, and descendant, and to achieve worldly and hereafter welfare supported by wealth or mal. The Maqasid Syariah is then realized in Islamic principle and then translated into Islamic economics and finance as a practice. The objective of this Maqasid is of course in line with the Indonesia own country objective, that is to create masyarakat adil dan makmur. So we are not only talking about the welfare and prosperity, but also the equitability and keadilan, that is a just society. One of the most important tools to achieve the objective of the country is the government budget or fiscal policy. The budget or APBN or fiscal policy play a three important role, that is to stabilize, making sure that the country, the economy, and the people, the society can continue having a stability in order for them to be able to achieve our goal. The second one is for the allocation. The budget is also an important tool to make sure that the allocation of resources will be done according to the value of efficiency and equitability. The third one is for the distribution. This is maybe relatively very close to the heart and the value of Islam, because Islam providing a lot of teaching on how we should care to others. The budget or the fiscal policy have very important role in distribution. For those who has the economic power, they have to contribute through taxation. And for those in need, they are receiving government support. Currently, Indonesia is using this tool, especially in order for us to be able to help people, especially when they are threatening by COVID and their economic activity has been halted or hampered because of the pandemic. Let us see how the Indonesia is trying to use this budget in order to also articulating and achieving the value of our country as well as the value of our belief, that is in this case the religion of Islam. First, of course, we have to make sure that the people are protected because of this pandemic. Is also affecting not only the health but also the social and economic activity. But we have to make sure that we are using our resource in order for us to be able to invest, especially on the human capital, because at the end, the life and the livelihood of the people is the most important. They have to be healthy, they have to be educated, they have to be productive. And of course, they have to take care of the environment, a place in which we are all live and survive. And we will use also our budget in order for us to be able to continue improving the welfare in the more and the most equitable way. That means we have to build infrastructure, especially for the region and for the segment of population which is left behind or not yet enjoying the prosperity. We call it the 3T, daerah tertinggal, termiskin, dan terluar. So let's now move to the role of Islamic finance in accelerating the economic recovery. In the last decade, Islamic finance has been one of the fastest growing sector in the global financial industry. They even outpacing the conventional financing market. Global Islamic Economic Report 2020 estimated that the value of Islamic finance asset increased by 13.9% in 2019. This is from 2.52 trillion US dollar to 2.88 trillion US dollar. Due to the impact of the COVID-19, the value of Islamic finance asset is expected to show no growth in 2020, just like all other economic activity. But this is going to be then rebound and grow at 5-year compounded annual growth rate of 5% from 2019 onward, and expected to reach 3.69 trillion by 2024. With this global trend, Islamic finance in Indonesia also showing a consistent positive growth amid the pandemic. In the banking side, Islamic banking asset grew by 15.6% year on year on May 2021. And the asset has reached 598.2 trillion rupiah. This evidence showing that Islamic banking performance is doing much better than the conventional banking system. In the Islamic capital market, the number of investors has also increased 9.3% in the first 3 months of 2021. As of July 2021, we see the outstanding of the Indonesia sovereign sukuk has reached 1,076 trillion rupiah. That means it is growing by 10.75% year to date. and this will estimated to continue growing in the future. Ladies and gentlemen, we all know that Indonesia is among the main contributor of the issuance of global sukuk at the international market. Our share is 23.11% from the global issuance of total $23.65 billion. It is also worth noted that during the period of 2013 to 2021, there are 3,447 projects which is financed by sukuk. Indonesia certainly has diversified and innovated our financial instrument, and we are tapping the very strong potential of Islamic finance, both domestically and globally. Indonesia has enormous opportunity to optimize its Islamic financial market by developing more variant of sukuk financing. We just introducing Khas Wakaf Link Sukuk or CWLS and Green Sukuk. We will give you an example that even under an uncertainty on the global economic market condition due to the COVID-19, last June, the government of Indonesia has again successfully issued the first sovereign green sukuk on the global market with the value of $3 billion. The global green sukuk in 2021 was issued with the maturity of 30 years, which is the longest, and a yield rate of 3.55% per year, very competitive one. As part of a strong commitment to combat the impact of climate change, Indonesia, which is already ratified Paris Agreement in 2016, we also developing and introducing the financial instrument in order to finance our Paris Agreement. That is to reduce the greenhouse gas emission by 29% by our own effort and 41% with international support. Leveraging untapped financial resources and innovative financing is therefore becoming a necessary to close the financing gap for climate action and also to accelerate toward sustainable development goal. The new financial instrument, which we introduced in recent years, has potential to continue growing. And this is also a game changer domestically as well as globally. Our success story as an emerging market who continue innovate our financial instrument, both in accordance to our commitment on environmental as well as in accordance to our belief in Sharia, is actually one of the most important development that we will continue develop and support. Let us look at the rapid development of global green bond or green sukuk market, which offer an attractive financing vehicle for many of our green project development, and also in order for us to be able to issue a long-term finance instrument. In 2020, even during a very high uncertainty due to the COVID-19 pandemic and also a very volatile market, especially on the financial sector, Indonesia has been successful in issuing global green sukuk at the amount of $750 million. This is the third issuance since 2018, which we are all aiming for a very important segment of green bond and sukuk bond. Indonesia has been recognized as a leader in the sovereign green sukuk market. Indonesia also has so far raised total 2.75 billion US dollar from 3 global green sukuk issuance. This issuance become an excellent example of the pioneering role of government in leveraging the private sector participation, especially in developing a green project based on Sharia. There are several achievements on this issue. First, this green sukuk is the first ever 30 years and the longest green sukuk issuance in the world. Sukuk that is issued by Indonesia at the global market, also seeing as attracted many global green investors. 57% of the total value of our green sukuk issuance are global green investors. The yield that we also achieve recorded as the lowest ever 30 years yield, which is also measured as a spread over US Treasury and profit rate. And lastly, the green sukuks also show a potential to significantly boost public and private partnership, and especially in investing in the green project by also successfully reducing carbon emission. Distinguished participants, ladies and gentlemen, we are all aware that the Islamic finance has the virtue of promoting not only economic productivity and welfare, but also to encourage people to be more creative, innovative, and technology play a very, very important role in promoting productivity and innovation. The development of Islamic public finance also have the objective in harnessing and building all the infrastructure so that the people of Indonesia can continue using the technology in order to improve their life and livelihood. Indonesia see the transformation toward digital economy has been accelerated due to the COVID-19 pandemic. And this will require a lot of infrastructure investment in order for us to be able to provide equitable access to the digital technology for all people of Indonesia. With the growing ecosystem in general financing technology in Indonesia, we also see a lot of product which is based on Sharia in the financial technology. Sharia fintech asset in Indonesia has reached 134 billion rupiah as of June 2021. This is still only 3% of the total fintech asset in Indonesia. That means it will potentially grow larger and faster. The contribution of the whole fintech asset is still relatively quite small. Sharia fintech asset especially continue increase with a very high pace. It is increased more than 50 times only in the past 2.5 years, so less than 3 months. This is showing a very, very strong appetite and also potential of the market. Global Islamic Financial Report in 2021 stated that Indonesia is one of the biggest country in terms of the market size of Sharia fintech transaction, which already reached 2.9 billion US dollar in 2020. Indonesia is among the top 5 behind Saudi with 17.9 billion, Iran 9.2 billion, UAE with 3.7 billion, and Malaysia 3 billion. I believe we are going to see this as a very strong growing, not only in terms of the asset value, but most importantly in terms of the participant of the people. In terms of the economic stability, the close relation between the financial sector and the real sector in Islamic finance is a key important element in creating financial stability. This is because the development of the financial sector will always follow by the development of the real sector. So we can hopefully avoid financial bubble that usually drive the financial crisis. But we should not be complacent because other bubble can continue and will also manifest in many different forms. So we should not take for granted that following a Sharia law will then can avoid a bubble. We should be very vigilant. The share of Islamic finance, excluding of the Islamic social finance, is only about 10% at the national financing total. We believe that this share have the potential to grow very strongly in the future. Another area which is also important, especially in the context of Indonesia, is the increasing role of Islamic social finance, such as zakat, infak, sodakoh, and wakaf. Islamic social finance play an essential role in the economy. Islamic value is based on altruism and caring for those vulnerable and poor, and that's why this is one of the most important manifestation of this value. On the consumption side, zakat, infak, and sodakoh stabilize the purchasing power and encourage public consumption, especially for the most vulnerable and the poor. This is consistent with the government-owned policy in providing cash transfer for the most vulnerable. Currently, 10 million families under the program Keluarga Harapan receive cash transfer according to the composition of the family. If those who has children, especially below 5 years, and the primary school, secondary school, those family who has the pregnant mother, then they are going to receive a benefit according to the need of those family. This is what I call it a prinsip keadilan, or a just principle, which is consistent with the Islamic value. People or the Muslim can also exercising their altruism and social value by paying zakat, providing infak, or providing sadaqah. This kind of social finance and altruism can also be channeling into productive side. Wakaf may provide an important support, especially for even infrastructure project. This is one of the creativity that all of us need to embrace and continue develop. Indonesia has a vast potential for Islamic social finance. Significant Muslim population in Indonesia and the rapid digitalization will provide a platform which can then easily provide a platform for those who can exercise their Islamic value through social finance. Islamic social finance collection is also showing a very rapid growth, 34% during the year of 2002 to 2019. This collection in 2019 has reached 10.2 trillion, and this is going to be estimated to increase to 17.3 trillion by 2021. Of course, the most important in managing this is the transparency, because at the end, this is related to the trust of the people, that they are making and conducting a good deed. And that's why this is becoming very critical. Governance, transparency, accountability is very important. For Indonesia, I would like to point out that according to the World Giving Index 2021, Indonesia is being seen as the most generous country in the world. The collection of charity reflecting this generosity and can be transformed into the social finance in the form of zakat, infak, and sedekah, also wakaf, that can become a potential social finance to transform the society. Islamic principle in Islamic finance also creates resiliency in the financial sector, especially during the crisis. Islamic Bank in Indonesia show a strong performance during the pandemic. Of course, this is also have something to do with the government action to merge three important Syariah banks that create an economic of scale, and this also can create a better governance as well as reaching out to a many segment of Indonesia. At the end of 2020, the asset value of Islamic Bank grew up to 13.11% year on year. This is higher than the conventional bank, which only grew by 6.73%. The intermediation role of Islamic Bank also continue running well. Islamic Bank financing grew by 8.08% by the end of 2020. It's much better than the conventional bank, which contracted in terms of the intermediary or channeling credit by negative 3.02. So there is a good and there is also a very fine balance of having a segment which is related to the Sharia that can create resiliency. Islamic finance also support financial inclusivity and economic sustainability. The data show that Indonesia has the largest number of Baitul Mal wa Tamwil or Islamic Union globally. There are approximately 4,500 BMT that their function is helping society, especially in the rural area, and also accessing microfinance. I do hope that this role can also complement what the government is doing through our village fund, which we continuously transfer directly for central government to the village. And part of this village fund is definitely to improve the prosperity of the village people. Ladies and gentlemen, we also will continue improving and innovate our instrument, including Islamic finance instrument. One of the innovation is the blended Islamic finance, which we call it Green Sukuk and Khas Wakaf Link Sukuk. This is another creativity innovation, which we are going to combine all the instrument in order for us to be able to continue providing platform for the society to continue exercising their value within the Islamic finance instrument and policy. So looking back to the huge potential Islamic finance in Indonesia and also the market share of Islamic finance, which is up to now, is still continue need and have the potential to grow. The government of Indonesia through the Ministry of Finance, hand in hand with KNEKS and KSSK, took initiative to reform financial sector in Indonesia, including Islamic finance. Islamic finance reform has three pillars. First, increasing comparative advantage by enhancing the uniqueness of Islamic finance, creating an equal level of playing field for Islamic finance as a second pillar, and providing legal confirmation and certainty for Islamic finance business transaction. In the last 3 decades, the development of Islamic finance, there is a tendency that Islamic finance follow conventional financial product. So they are mirroring. The government will support and to encourage the development of Islamic finance by highlighting and amplifying the unique characteristic of Islamic finance, such as profit and loss sharing in financing, and also risk sharing in insurance. This is expected to encourage the comparative advantage and also to create a unique segment that can stabilize the whole system overall. The government wishes to encourage also the consolidation of Islamic Finance Corporation in Islamic banking and Islamic insurance or takaful. We need strong Islamic Finance Corporation, and the governance of this Islamic Finance Corporation need to be strengthened. The governance that can cater the need in real sector financing, responsible in terms of the risk management, and also ability to manage unexpected risk. Government also want to encourage the accumulation of long-term funds through insurance, pension program, and development of Aukhaf, which is one of the most strategic Islamic social finance instrument in the future. In the long run, this fund is necessary also for people to be able to continue exercise their altruist behavior. At the same time, the potential of this source of fund for infrastructure development is going to be also one exciting alternative or opportunity. The government of Indonesia also would like to encourage the variety of Islamic finance product or instrument, which is currently still relatively small. We hope that this will create an investment facility for the community and will attract from abroad, the investors from abroad, as well as encourage the development of domestic financial market, which is currently Indonesia have a shallow financial system or financial market. To support the inclusivity, the government also commit in enhancing financial inclusion by strengthening Sharia for Sharia finance for small and medium enterprises. This is empowering the Sharia small medium enterprises finance by also developing halal value chains ecosystem and also developing Islamic boarding school based on Sharia finance. Considering the rapid advancement of digital technology, the effort in improving Sharia financial inclusion will also have to take advantage of this digital technology. The initiative is in line with our G20 Global Partnership for Financial Inclusion priority, which is focusing on digital financial inclusion and small, medium enterprise finance. Finally, we also have to build legal certainty for the market participant. Currently, Sharia banking and insurance and guarantee are regulated by law. We also need to reform Islamic finance sector, especially protecting for the small investors, which is sometimes they are very vulnerable for the conduct of those who's irresponsible and have a conduct which is violating what we call it honesty as well as amanah. Ladies and gentlemen, let me now close by hoping that this conference will certainly have the ability to develop a new knowledge, a place for all of us to be able to exchange view, and also to create innovation on how we are going to be able to continue support the role of Islamic finance, how we can effectively contribute to the resiliency and sustainability and inclusivity of the financial sector, both in domestic as well in global. I also hope that the discussion will provide a valuable recommendation, implementable, that can be adopted by the government as well as private sector that can collaborate to develop together a more sustainable and just Islamic finance market. I also encourage all stakeholders both domestically and globally, to implement Islamic principles and collaborate with Indonesia in the more sustainable and inclusive way. The acceleration of economic recovery and sustainable development certainly is the same objective that we can achieve together. I look forward to having a very fruitful discussion on this panel as well as seminar. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Her Excellency, for your thoughtful speech. Excellencies, distinguished guests, ladies and gentlemen, it is now my pleasure to introduce you to the Director General of the Islamic Development Bank Institute, who will also deliver his remarks. Ladies and gentlemen, please welcome His Excellency Sami Al-Suailam.
Bismillah ar-Rahman ar-Rahim. Her Excellency Dr. Sri Mulyani Indrawati, Honorable Minister of Finance of Indonesia, Honorable Febrio Nathan Kacharibo, Head of Fiscal Policy Agency of Indonesia, Honorable Mary Ilka Bangistu, Managing Director of Development Policy and Partnerships at the World Bank. Distinguished guests, ladies and gentlemen, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. I'm glad to be with you today, and on behalf of my colleagues at the Islamic Development Bank Group, allow me to extend our warmest greetings and appreciation to the organizers and to all participants at this exceptional event. I would like to express our sincere thanks to the government of Indonesia for the continuous support it provides to the ISDB group, which started in 1974 when Indonesia joined the ISDB as a founding member. Today, Indonesia is one of the most active member countries of the ISDB group. Our sincere prayers for Indonesia and all our member countries to weather this COVID-19 pandemic and to make a swift, strong, and sustainable recovery as soon as possible. Ladies and gentlemen, as we are all aware, the impact of the lockdown has been particularly damaging to micro, small, and medium enterprises across the globe. Many of these enterprises have been finding it hard to service their debts, even with the moratoriums that act as reprieve only over a short window. The accumulation of debt not only threatens this very vital segment of the economy, but also the ability of the economy at large to recover and revert to normal growth and progress within a reasonable period. Given the long-term negative impact of large debt burdens, there is a need to look beyond short-term remedies or quick fixes. What we need is a paradigm shift. Instead of debt-driven economic growth, we should be looking for economic progress based on risk sharing and shared prosperity. Risk sharing is not only a set of contracts, but a framework for building a resilient and dynamic economy. The Basel III requirements, for example, clearly emphasize the importance of constructing a shock-absorbing financial system that can withstand risks and support smooth and swift economic recovery with minimum costs. The paradigm of risk sharing extends across all the domains of the economy, including the two major domains, for-profit and non-profit sectors. In this context, Islamic social finance, including zakah, sadaqat, aukhaf, cooperative insurance, among others, is a vital safety net necessary for the resilience of the economy. We are already witnessing the positive impact of charities in stabilizing the incomes of micro and small businesses, as reported by recent research from various parts of the globe. In this regard, we acknowledge the fact that the National Zakat Agency of Indonesia, Basnas, along with the network of Indonesian Zakat institutions, have provided an excellent role model with their humanitarian and economic empowerment programs funded by Islamic social contributions. The integration of the tools of Islamic social finance with fiscal policy instruments may further lead to their integration with the Islamic capital markets. Indeed, Indonesia, as has already been indicated by Her Excellency the Minister, has already demonstrated how an innovative mechanism like cash waqf linked sukuk can be designed and implemented by blending Islamic social finance with public finance. Brothers and sisters, for Islamic social finance to achieve its desired objectives, it needs to adopt cutting-edge technologies such as the blockchain technology, artificial intelligence, and the Internet of Things. At the global level, the work of fintech startups has been lauded for their financial inclusion perspective, as these companies often work with micro-enterprises and fringe borrowers with minimal financial records from informal sectors. In the Islamic finance space, we are observing the continued success and leadership of charity crowdfunding platforms, two of which won this year the ISDB Prize for Impactful Achievement in Islamic Economics. We are also witnessing the adoption of artificial intelligence in enhancing zakat collection and distribution. This can be effective in bringing down the gap between potential and actual zakat resources. As various estimates have indicated, less than 10% roughly of potential zakat is currently mobilized, indicating the huge potential that remains to be tapped. In this connection, I would like to underline a specific example of the successful collaboration between the ISDB Group and the National Zakat Agency of Indonesia in a pioneering pilot project that aims to integrate zakat with community-driven development programs of Indonesia. The project seeks to leverage the enormous potential of crowdsourcing, motivating the crowds to become an active network of developers. The Aukhaf sector. In the Aukhaf sector, we are witnessing a greater application of technology in ensuring the integrity and preservation of Aukhaf assets, which is critical to assure Waqf donors of the sustainability of their contributions. Technology also makes it possible to use smart contracts to develop such assets in a trustless environment. By doing so, it has the potential to address a long-standing problem facing the Waqf sector, which is trust deficit among the stakeholders. Technology can indeed unlock the enormous potential of Waqf, which can in turn support essential social goods, particularly education and healthcare, which proved to be critical and vital during the pandemic. Brothers and sisters, let me conclude this short intervention by pointing out once again that risk sharing is a paradigm that encompasses commercial as well as social finance. It is a paradigm that can bring stability, inclusion, and resilience to the economy. Indonesia has been pioneering in many areas of Islamic finance, as already indicated by the Honorable Minister, and we look forward to continuing its creative leadership of the industry in the post-COVID world. Thank you. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, His Excellency, for the remark. Excellencies, distinguished guests, ladies and gentlemen, before we go further to the panel session, it is with great honor that I may now introduce you to our guest lecturer for today, Ibu Mari Elka Pangestu. She is the World Bank Managing Director of Development Policy and Partnerships. She joins the bank with exceptional policy and management expertise, having served as Indonesia's Minister of Trade from 2004 to 2011 and as Minister of Tourism and Creative Economy from 2011 to 2014. And today, she will be speaking about global recovery of COVID-19 pandemic, especially in terms of Islamic economy, Sharia financial policies, and strategies. Ladies and gentlemen, please welcome Ibu Mari Elka Pangestu.
Thank you for that kind introduction. Distinguished guests, ladies and gentlemen, good morning to all of you in Asia, and good afternoon and evening to those of you connecting from other parts of the globe. It's my pleasure and honor to participate in this conference, and I would like to thank the Ministry of Finance of Indonesia for inviting me. And I just want to start today with a few words on COVID and the global recovery, as well as recovery in the developing economies. I think we all know how the pandemic has had a devastating impact on income growth, poverty, and inequality. Per capita income losses in 2020 will not be fully unwound by 2022 in most emerging market developing economies. In fact, 2/3 will not be regaining back post-pandemic per capita even by 2022, as advanced economies would have recovered by 2021. By the end of this year, about 100 million more people are expected to have fallen back into extreme poverty. And the pandemic has also exacerbated inequality, as it has disproportionately affected vulnerable groups: women, school-aged children, and informal and unskilled workers. While 2021, we expect the global economy to recover and expand at 5.6%. In fact, it's a very strong post-recession pace, the strongest post-recession pace in the last 80 years. So it's quite remarkable. You've had the worst recession, and then you've also had one of the strongest post-recession recovery, but it is very uneven, and it is really reflecting a sharp rebound in major economies, most notably the US, partly owing to substantial fiscal support, vaccine rollouts, and a reduced lockdown. But the recovery is very uneven, with many emerging market and developing economies and elevated COVID-19 caseloads, obstacles to vaccination, and a partial withdrawal of macroeconomic support are offsetting some of the benefits of strengthening external demand and elevated commodity prices. So we don't really see in the next 1 or 2 years that emerging markets will be able to recover back as strongly as developed countries. And whilst we expect overall emerging market developing economies will grow at 6% in 2021, excluding China, growth will be much more modest at 3 to 4%. And again, very uneven, with East Asia doing much better and regions like Latin America and Sub-Saharan Africa doing much worse. And we expect that developing countries, in fact, will still expect to earn losses of over 4% of GDP, even as they try to recover. So I think we have the challenge of development ahead of us. And in this context, I would like to share today some thoughts on the potential role of Islamic finance in accelerating the post-pandemic economic and social recovery. As was emphasized by both Ibu Sri Mulyani and Dr. Sami Al-Suailim. As we begin to reflect on the outlook for the post-pandemic period, it is clear that the recovery will entail considered action on a broad range of issues. Countries will need to provide reliable financing to small businesses, invest in sustainable infrastructure, expand job opportunities, address inequalities, protect vulnerable groups, and tackle climate change. All of these issues should be approached in an integrated way. At the World Bank Group, we have used the term green, resilient, and inclusive development, or GRID, to describe this approach. The Islamic finance industry has expanded rapidly during the last 2 decades, with annual growth of over 11.4%, with Islamic financial assets currently estimated at over 2.4 trillion. In many majority Muslim countries, Islamic banking assets have been growing faster than conventional banking assets. And there is also increased interest in Islamic finance from non-Muslim countries, such as the UK, Luxembourg, Hong Kong, Singapore, and South Africa. So in other words, Islamic finance can play a role in this post-pandemic recovery. And several features of Islamic finance can make its instruments help with the post-recovery challenges. Its emphasis on tangibility ensures a direct link to financing physical assets, supporting productive activities, and increasing output at the country level. In addition, the use of profit and loss sharing arrangements encourages the provision of financial support to productive enterprises that can increase output and generate jobs. For the post-pandemic recovery, I think there are 4 key areas where we can maximize the contribution of Islamic finance, including enhancing small and medium-sized enterprise support. Just as Dr. Sami Al-Suwaila mentioned, SMEs have been the hardest hit in this pandemic. Second, financial inclusion. Third, social protection for a greener, resilient, and inclusive recovery. So first, how can Islamic finance support financing needs of SMEs? SMEs have been hit hard by the pandemic, and thousands of them have gone out of business altogether. Since SMEs account for 2/3 of global employment and half of global GDP, providing a robust and sustainable support to SMEs would be critical to recovery. Unfortunately, SMEs often do not have reliable access to capital due to a general perception that they are high risk and their lack of collateral to secure bank loans. Islamic finance can offer various opportunities to expand available financing to SMEs because it has features which are well suited to small businesses, such as the asset-backed nature of its instruments, which alleviates the need to post collateral, partnership and equity-style financing, which reduces leverage, as well as profit and loss sharing, which encourages entrepreneurship. Also, various Islamic finance instruments, such as sales or markup financing, murabaha, trustee finance contracts, mudaraba, equity participation contracts, musyarakah, and leasing ijara are viable options for supporting SMEs and can also be coupled with risk-reducing measures such as guarantees, which can make SME financing more feasible and more relevant to small businesses. We have already witnessed examples of crowdfunding for SMEs using Islamic finance instruments. Launch Good went live in 2013, and by 2019 has raised more than 93 million in crowdfunding for over 8,360 projects across 133 countries. Blossom Finance has issued Smart Sukuk investment certificates to channel funding to small businesses and micro enterprises in Indonesia through local cooperatives known as Baitul Mal wa Tamlil, or BMT. So these are just examples of innovative instruments. Second, Islamic finance can help to expand financial inclusion. The post-pandemic period can offer opportunities to enhance Islamic finance inclusion, capitalizing on the expanded use of digital technology, as Minister Sri Mulyani mentioned, as we have seen how digital technology has been really very relevant and very useful during the lockdown to transfer funds and to make payments for goods and services and pay bills with limited physical contact. A recent paper shows that the number of new users of digital financial services increased on average by 24% in a sample of 74 countries since the start of the pandemic. In many countries, the scaling up of innovative digital approaches, or fintech, has enabled financial services to reach vast numbers of previously excluded and undeserved households and small businesses. Fintech has also been instrumental in expanding financial access to women and women-owned businesses, particularly those in rural areas. Not surprisingly, the use of digital technology in the Islamic finance industry has also expanded rapidly, including examples of crowdfunding platforms for micro-entrepreneurs, example, Liwa from Jordan and Narwi from Qatar, property crowdfunding, Ethis in Malaysia, and payment services such as Pay Halal and Annual Pay, both also from Malaysia. A key message of the 2020 World Bank study on leveraging Islamic fintech to improve financial inclusion is that the Muslim population is young and digitally savvy. There are significant opportunities to use digital technology to expand the reach of Sharia-compliant products and instruments, as well as manage risks and reduce transaction costs. Third, Islamic social finance help to protect the vulnerable. The previous two speakers mentioned this. The pandemic has highlighted the need to protect vulnerable populations, and many authorities have responded with various tools, including cash transfers, unemployment benefits, and in-kind support for households who have lost incomes and face the risk of falling below the poverty line. Islamic social financial tools such as Aukhaf, Zakat, and Sadaqah have been used for social protection, poverty alleviation, and socio-economic development for over 1,400 years, and as both speakers emphasized just then, remain very relevant today. Throughout Islamic history, Zakat and Wakaf were the main providers of many of the social services that today are financed by the state, including education, healthcare, infrastructure, development and maintenance, as well as social and welfare provision for the poor and destitute. So Islamic social finance institutions have also supported a more equitable distribution of income and wealth as wealthy individuals and families release property into the service of the people for doing good. For example, institutionalized zakat is an integral part of the social protection program of Malaysia, and the zakat institutions have so far allocated about 40.5 million to support the needy during the pandemic. And Ibu Sri Mulyani also gave some examples just then. In addition to the classical Islamic social finance instruments, Islamic insurance, takaful, can be deployed to strengthen household resilience to unforeseen contingencies, such as job losses, illness, or death of a family breadwinner. Businesses, particularly SMEs, can also benefit from getting takaful coverage to protect property. I agree with Dr. Sami on just then he emphasized the use of technology in social finance. Finally, we can harness Islamic finance for greener recovery. Climate change is a real threat to the future of the human race. In recent weeks, we have seen some of its effects in the form of extreme weather events, including heat waves, wildfires, floods, and the earthquake in Haiti. Increased frequency of such events will have dire implications for livelihoods around the world. And climate change, the impact of climate change actually affect the poor and the vulnerable in a country the most, and affect the poor and vulnerable countries the most. So as countries eventually emerge from COVID, it is imperative that we consider options that address the development challenges which have been accentuated by COVID and the climate crisis in an integrated way, and lead to a green, sustainable, resilient growth and recovery path. Islamic finance can play a role to play, Islamic finance has a role to play by facilitating the mobilization of Sharia-compliant capital into investments in renewable energy, energy efficiency, cleaner transport solutions, pollution prevention and control, recycling, climate resilient infrastructure, as well as ecological protection and climate adaptation. The landmark issuance of Green Sukuk in Malaysia and Indonesia, which Ibu Sri Mulyani also mentioned, have demonstrated the potential of Islamic finance as a source of capital for climate and environment-friendly investments, which typically have long gestation periods and require large capital outlays. Other instruments, such as forward contracts, istisna and salam, and dedicated Islamic funds can also be mobilized to support green investments, while takaful or Islamic insurance can be used for adaptation purposes. To ensure that the Islamic finance industry fulfills its potential in supporting the post-COVID recovery, there is a need to continue the process of strengthening the legal foundation, regulation and supervision, risk management, and product standardization, awareness and skills around Islamic finance. Let me say a few words on each of these 6 pillars of finance for your consideration at this annual Islamic Finance Conference. First, to strengthen the legal foundation of Islamic finance. The legal underpinnings of Islamic financial transactions can be strengthened further to ensure that they are robust to handle the continued growth of the industry. These legal foundations have not been fully tested in many jurisdictions. For example, in cases of disputes between parties to a contract, it is uncertain whether court rulings will be based on secular law or on Sharia law. Despite some high-profile cases, there is still a high degree of uncertainty surrounding insolvency issues. Second, to improve the regulation and supervision of Islamic financial institutions. The Islamic Financial Services Board, despite the remarkable progress to date in establishing the key standards for regulating and supervising Islamic financial institutions, can redouble efforts to support making standards fully operational in individual countries. In many countries with active Islamic financial institutions, frameworks devised for conventional bankings are applied to Islamic banks without the necessary modifications. There have been cases where regulations prohibit banks from dealing in real estate by buying or selling and creating clear problems for Islamic banks which rely on trade-based contracts. It is therefore critical for Islamic finance standard setters and development practitioners to continue supporting the consistent application of relevant standards. Third, to enhance risk governance and management practices. Islamic banks need to develop more effective risk management tools, not only to enhance their overall safety and soundness, but also to improve their ability to support real sector activities. Islamic banking involves unique risk factors, including equity investment risk, rate of return risk, displaced commercial risk, and Sharia non-compliance risk. Enhancing risk governance will require focusing more systematically on issues such as the role of the board and senior management, the composition and functioning of the board risk committee, existence of a chief risk officer, Sharia risk controls, independence of the risk management function, risk management culture, risk communication, risk appetite, and so on. Fourth, to promote the standardization of products and documentation. Islamic financial institutions could enhance harmonization of products and documentation to increase operational efficiencies and improve market conduct. Even for the well-established products, the lack of standardized documents and structures for contracts sometimes poses challenges. Documentation and structuring done on a case-by-case basis creates high transactions costs, unnecessary complexity, and delays in finalizing transactions. Fifth, to raise awareness through appropriate financial literacy programs. Improvements in financial literacy can empower Islamic finance consumers to make more informed decisions and increase financial inclusion. In many Muslim countries, there is still a lack of awareness and understanding of Islamic finance products and negative misconceptions regarding the complexities of Sharia contracts and the Sharia permissibility or authenticity of the products. A comprehensive financial literacy program targeting potential consumers is required to disseminate accurate information in a simple and effective manner, thereby helping consumers to make informed decisions when considering Islamic financial products, and therefore also widening the scope for financial inclusion and support of SMEs to be a key role of Islamic finance in this recovery process. Finally, to increase the number of skilled professionals, substantial capacity building is needed, as the rapid growth of the Islamic finance industry has exposed the global shortage of skilled and experienced finance professionals in the sector. There is also a shortage of Sharia scholars with adequate knowledge of banking and finance, and many regulators still do not fully understand the workings of Islamic financial institutions and markets. While the overall knowledge base for Islamic finance has grown substantially in recent years, its transformations into actual capacity building on the ground has not been extensive, and the need for the industry to innovate and adapt has put additional pressures on the existing cohort of industry experts. Ongoing efforts by the Islamic Development Bank to expand its technical assistance and capacity building for member countries are therefore welcome, and in addition to existing programs of training being implemented by the regulatory standards such as the IFSB. Let me now conclude with a few words about the role of the World Bank in the development of Islamic finance. Over the years, we have been active in fostering the use of Islamic finance for sustainable development. In 2007, the bank group's political risk insurance arm, MIGA, provided $427 million Sharia compliant investment guarantee for the Doraleh container port project in Djibouti, and in 2011 provided $450 million in investment guarantee to back a Murabaha financing facility underwritten by Deutsche Bank and Saudi British Bank. Some of our lending projects have also incorporated Islamic finance components. A couple of examples include the $300 million Promoting Innovation for Inclusive Financial Access project in Egypt in 2014, which offered a menu of financial instruments, including Islamic financing to SMEs and rural dwellers, and the $250 million Turkey Frontier Finance project also in 2014, which provided access to longer-term Islamic finance and export factoring for SMEs and export-oriented enterprises. In 2014 and 2015, the bank's treasury issued 2 sukuk that raised $700 million in support of the International Finance Facility for Immunization. The private sector arm of the World Bank Group, the IFC, has set up a special purpose vehicle, the IFC Sukuk Company, which uses proceeds from its sukuk issuances to finance development activities in our client countries. The bank group has also partnered with the Malaysian authorities to issue the first green sukuk in 2017 and has worked with the Indonesian authorities in building capacity for managing and reporting the proceeds of green sukuk. We are also active in improving general understanding of Islamic finance through a comprehensive program of research reports, conferences, and workshops delivered under our former Islamic Finance Center in Istanbul. The center has also provided technical assistance for enhancing the regulatory and supervisory framework for Islamic banks in Bangladesh and Tanzania, and supported the development of an Islamic financial inclusion strategy in Pakistan. Upon the closure of the Istanbul Center in 2019, we consolidated Islamic finance knowledge work in our Kuala Lumpur Knowledge Hub with the support of the Malaysian government. And we would be very happy to support any of you in your work further on and with our knowledge product and our research reports. And of course, we'd be very happy to continue to work with many of you here. In conclusion, I would like to say that I'm optimistic that Islamic finance can be scaled up significantly to support the post-COVID recovery efforts and has the potential to become a key part of accelerating the transition to a greener, more inclusive, and resilient growth path across the globe. The World Bank Group is eager to further strengthen our partnership with the Islamic finance industry to maximize its contribution to sustainable development. Thank you very much for your attention, and I wish you well, and I wish you good deliberations in your conference. Thank you.
Pangestu, for your insightful and mind-opening lecture today.
Excellencies, distinguished guests, ladies and gentlemen, we are about to begin today's panel session on sustainability and inclusive growth, maintaining human capital and enhancing productivity and competitiveness. This session will be led by a chair of discussion, Dr. Kiki Veriko. Dr. Kiki Veriko is advisor for international trade and industry to the Finance Minister of Republic of Indonesia. He is also a senior lecturer of Universitas Indonesia, as well as associate director of the Institute for Economic and Social Research. Dr. Kiki Veriko? Yeah, good morning, Pak Kiki. Good morning, Pak. Can you hear me?
Yeah. Sorry, lag here. Very good morning.
Yeah.
So you hand over this to me already, or you want to say something before?
Yeah, please, before we begin this session, allow me to invite all the panelists to also join on screen, for we are going to take photos of you and all the panelists as a commemoration. I would like to invite Mr. Habib Rab, lead economist, World Bank, Mr. Adi Budiarso, Director of Center for Financial Sector Policy, Ministry of Finance, Mr. Riyad Al-Kharif, Deputy Minister for International Affairs, Saudi Arabia. Yeah, thank you for turning on your cameras already. We are going to take photos of you, of these very prominent speakers today. Smile. Everyone ready? May I count down to 3, 2, 1. Thank you very much. Now it is a pleasure to hand it over to you, Pak Kiki.
Okay, thank you very much. Auzubillahi minasyaitonirrajim. Bismillahirrahmanirrahim. Asyhadu an la ilaha illallah wa asyhadu anna Muhammadar Rasulullah. Rabbi shrahli sadri wa yassirli amri wahlul 'uqdatam min lisani yafqahu qawli. Assalamualaikum warahmatullahi wabarakatuh. So today we are going to have a first panel session. So this first panel sessions, before I start, Excellencies, Ibu Sri Mulyani, Finance Minister of Republic of Indonesia, Bapak Sami Al-Suwalim, DG of Islamic Development Bank Institute, Ibu Mari Kapangestu, Managing Director of Development Policy and Partnership of the World Bank, Bapak Dr. Febrio Kacaribu, Head of Fiscal Policy Agency, Ministry of Finance. And these first panel sessions will be led by myself. So the theme, as already maybe you may already receive, it's about the sustainability and inclusive growth, maintaining human capital and enhancing productivity and competitiveness. We are supposed to have 4 panelists, but unfortunately one could not join us today, so we have 3. The first panelist will be Pak Habib Rab, lead economist of the World Bank Indonesia. He will talk about the impact of COVID-19 policy response, strategies and initiative for economic recovery, and followed then by Dr. Adi Budiarso, from the Fiscal Policy Agency, Ministry of Finance. He will talk about the COVID-19 socioeconomic impact in Indonesia, policy response and strategies as well. And last but not least, we are going to listen to Dr. Riyad M. Al-Khrif, Deputy Minister for International Affairs, Saudi Arabia. He will talk about the human capital development framework and issues in public finance policy for economic recovery. So all of them will talk about the economic recovery. Thank you beforehand for your invaluable time to join with us and sharing your thoughts with all the participants here and those who will listen to this afterwards. So before I start, so the format will be like this. So I will read briefly your CV before you start. So and then you have 20 minutes for your presentations, and then subsequently followed by other speakers. And we are going to have question and answers session led by myself. First, I have several questions, general and specific for speakers afterwards, and then continue by the questions from the participants. So please, all the participants, you have chance to put your questions in the chat and then format. Also, for those who maybe follow this from other platform, you can also give questions, and then the organizer will collect all the questions and give the question to me. And of course, given time, we would not have time to giving all the questions to the speakers, and we will select based on that. So without further ado, the first speaker is Pak Habib Rab. So as I mentioned before, so I will read briefly resume CV from Pak Habib Rab. My apologize if I mispronounce every speaker's name. To be honest, because maybe some pronunciation is not correct. So Pak Habib Rab, if I pronounce properly, lead of economists at the World Bank, Indonesia, and work for macroeconomic, fiscal, and structural reforms in countries from Africa, Asia, and also just recent from Turkey. And prior to join the World Bank, he served as a UK government economic service and as an ODI fellow, and holds a degree in economics from Oxford University and University College London. So without further ado, Pak Habib Rab, the Zoom screen is yours. You have 20 minutes time allocations.
Thank you very much, Papa, Dr. Kiki Veriko. Assalamu alaikum rahmatullahi wa barakatuh. Excellencies, Minister Sri Mulyani Indrawati, Dr. Al-Sualem, Ibu Mariel Kapangestu, Bapak Febrio Kacharibu, Pak Adrio Adi Budiarso, and Deputy Minister Riyad Al-Khalif. It's a really great honor to be here today, and thank you very much for the opportunity to present our views on global economic developments and prospects. I don't know if my slides are currently on the screen. Sorry, Bapak Kiki, is the slides actually on the screen?
Organizer, is it the slide already with us? If you could share. Any committee? Yes.
Thank you very much. Next slide, please. What I will do is quickly go through our views on economic developments and prospects, drawing on our global economic prospects that were released very, very recently. So my presentation will be in 4 parts. The first will provide a snapshot of the global context in terms of pandemic and market developments. The second will take a stock of recent economic developments across both developed and emerging market economies. The third is our view on the global outlook and risks. And then the fourth will be some policy challenges facing emerging market and developing economies. Next slide, please. So starting with the global context, next slide, please. The key message from the last 6 months is that there have been renewed COVID waves with uneven vaccination progress. So the first chart on the left shows that the pandemic continues to exact a heavy toll, particularly across emerging market and developing economies. And what we see is that the subsequent waves of the pandemic, of the virus, are cresting at a higher daily infection rate than previous waves. Advanced economies have fared somewhat better thanks to the rapid vaccine rollout, but new variants, as we all know, originating in various countries, are now actually circulating globally. So all countries remain quite vulnerable, as evidenced by the pickup in cases in major advanced economies, particularly within those countries in parts that have low vaccination rates. This is somewhat illustrated in the second chart, whereby countries that have administered vaccines to a greater share of their population are seeing a far slower accumulation of caseloads. So the red line in the second chart shows that countries that have below average vaccination are seeing much higher pickup in daily caseloads, whereas the blue line in countries that have relatively higher vaccination are seeing much lower caseloads. The third chart shows that the disparities within countries, of course, is already quite striking. But the third chart shows that disparities in vaccination rates across countries are particularly stark. So lower vaccine coverage in emerging market and developing economies is also associated with high COVID caseload and vice versa in advanced economies. Next slide, please. In addition to these pandemic developments, I wanted to highlight 3 global market developments that impact on global economic prospects. The first, which is illustrated in this first chart on the left, is that trade costs have risen very sharply. Companies are facing higher freight costs, which is illustrated by the red line, and also localized shortages of shipping containers. So transport costs have effectively increased very sharply, and this is in part driven by the fact that in the last 6 to 12 months, much of the global growth has been driven by international trade intensity relative to domestic demand across countries. So the supply bottlenecks that this has created are constraining manufacturing trade. So we therefore expect that there will be some slowdown in global trade, maybe some normalization in the growth in normal or in external trade, and a shift in activity towards non-tradable services, particularly in economies that are beginning to lift mobility restrictions. So this is the first sort of global trend. The second is that international financing conditions have begun to tighten over the past months, in particular since the beginning of 2021. So yields on long-term government bonds have risen globally because of positive growth and inflation expectations. Higher yields in the US in particular have meant that portfolio flows to emerging market and developing economies have slowed down, and that's what you can see in the second chart, whereby in the first half of 2021 there has been an acceleration in net outflows from emerging market and developing economies, which has contributed to a relatively broad-based depreciation in currencies and prompted some central banks to tighten monetary policy despite weak economic conditions, domestic economic conditions. This is an issue I'll come back to later. And then the third chart, and which is the third development, is that commodity prices have increased quite sharply in 2021, thanks to the pickup in global demand. This is not just oil prices, which in fact have dipped a little bit in the past few weeks due to the uncertainty in the economic outlook related to acceleration of COVID cases in different countries, but also food and metal prices, which have added to inflation pressures, which is one of the policy challenges that many countries are trying to address in the context of low domestic demand, which also weigh on monetary policy decisions across many advanced and emerging market and developing economies. So pandemic still very much in focus. High trade costs, tightening international financing conditions, and elevated commodity prices are the key messages from the global context. Next slide, please. So if we now turn to economic developments, economic activity indicators paint a picture of divergent recoveries between advanced economies and emerging market and developing economies. So if we look at advanced economies first, this first chart shows that advanced economies progress in containing the pandemic through a ramp up in vaccination has helped to unlock quite a lot of pent-up demand. So retail sales have increased very sharply. On the supply side, construction activity is already above pre-pandemic levels, which is illustrated in this first chart. And industrial output and services consumptions are also rapidly closing the gap. Services are somewhat behind because of lockdown effects, but they are starting to catch up. But there are, of course, differences across advanced economies. The US, as Ibu Mari Pangestu mentioned, is recovering more rapidly than others, thanks to a combination of rising personal incomes and a very large fiscal stimulus. The euro area has been more constrained in the first half of 2021 due to initial challenges in vaccine rollout. And similarly, Japan contracted in early 2021 due to COVID resurgence and associated lockdowns. Chart 2 shows that despite this recovery in economic activity, the acceleration in demand has not led to an equal acceleration in employment levels. They remain quite below pre-pandemic levels. In some countries, this is partly attributed to the buildup of savings from stimulus support, which has raised reservation wages and the willingness to take up jobs, particularly in non-tradable services. So this is an ongoing challenge. The third chart, which is related to that, is the buildup in savings, particularly in developed markets, which has been higher than what was the case during the global financial crisis. And this is expected to unlock further sizable pent-up demand as pandemic restrictions are lifted. Next slide, please. Now, the situation in emerging market and developing economies outside of China looks somewhat different. In China, output has continued to recover, but policies are gradually shifting away from supporting economic activity towards reducing financial stability risks. So the credit support and infrastructure spending, which initially fueled investment, have started to moderate. Outside of China, the first chart shows that in other EMDEs, the sharp resurgence of new COVID-19 cases have continued to weigh on the recovery. So quarterly output has not recovered to pre-COVID levels and are recovering more slowly than during the global financial crisis. The second chart shows that services trade remains very subdued, which is the blue line and below pandemic levels, which is in large part because of international tourism, continuing to be dampened by ongoing travel restrictions, but also because of lockdowns, which have dampened the non-tradable services sector also. Retail sales, on the other hand, seem to have stabilized below pre-pandemic trends. The third chart shows, one silver lining, which, as discussed earlier, has been the buoyancy in goods trade. And this in turn has driven industrial output. So unlike the global financial crisis, when the recovery was driven by domestic rather than external demand, during this shock, the opposite seems to be the case. Next slide, please. I now turn to the global outlook and risks. in terms of the implications of all this for the global outlook. So the first chart shows that the global economy is expected to grow at 5.6% in 2021 and 4.3% in 2022. Though we are also revising our forecasts over the coming weeks. On aggregate, the global forecasts have been upgraded because of the diminishing impact of subsequent waves. So what we see is that lockdowns have had lower effects on economic activity over time due to households and businesses adjusting to new conditions. The second chart shows that or sort of reaffirms this divergent recoveries that we are seeing between advanced economies and emerging market and developing economies. So US output is rebounding particularly sharply, and growth in other advanced economies is also firming to a lesser extent, of course, than the US because of COVID cases. But in the second half, we do expect an acceleration in other advanced economies as well. So what we, in summary, see is that China and the US will really be driving output growth in 2021, followed by other advanced economies. Across most emerging market and developing economies, however, the resurgence of COVID waves coupled with the pace of vaccination, which is driven by a mix of supply constraints, which are alleviating more recently, but their population size is also larger. Health system capacity constraints are also greater, have all led to downgrades in 2021 growth forecast for over 40% of the EMDEs. So relative to what we saw in what we were projecting in 2020, there's been a downgrade for 40% of emerging market and developing economies. So as a result, though the US will be able to close its output gap, this is the third chart, relative to pre-pandemic projections, and other advanced economies will be able to narrow the gap. For many emerging market and developing economies, we expect the output gap to in fact increase in 2021. Next slide, please. So we highlight three risks to this outlook, which continues to be subject to high degrees of uncertainty. The first risk is of course the continued COVID-19 flare-ups, including new variants. So COVID-19 caseloads are likely to remain relatively high in many parts of the world, including in EMDEs, where vaccination progress has been relatively slow, or in low-income countries where vaccinations have barely, are only starting to accelerate. Vaccine supply progress aside, within many countries, a substantial share of population is also hesitant about inoculation, which is what we see in the first chart on the left-hand side. So, the continued circulation of the virus in these places points to more, stop-go type of growth scenarios. The second risk is that there is rising pressures to normalize monetary policy before economies have fully recovered from the economic shock. And this is because of external financing pressures, which we discussed in the global context, and rising prices, also part of the global context. So the currency pressures that arise from these capital flow pressures have prompted several central banks to start tightening monetary policy, and that's what we can see in the second chart. That over time, over a period of 6 months, how much on average have policy rates tightened as a result of significant depreciation episodes. Now, this of course poses a risk for the recovery through rising costs of financing, which brings me to the third risk, which is that the increase in government and corporate leverage, so increased accumulation of debt, also poses a risk in the context of tightening cost of financing. So up to now, forbearance measures and other government support programs have been able to contain widespread insolvencies and deterioration of banking sector asset quality, which is what we're seeing in the third chart. In fact, non-performing loans have been on a downward trend in both advanced economies and EMDEs. But forbearance measures might be masking the true state of asset quality, and something that needs to be watched carefully as these measures start to be unwound. So over the medium term, weak bank balance sheets, coupled with corporate debt overhang, poses added risks to the recovery as companies may not want to take on debt and banks may not be willing to issue more debt. So this is the third risk. Next slide, please. More generally, over the medium term, what we see is a major risk of economic scarring and rising poverty, which is also a point that Ibu Mari Pangestu raised in her opening remarks, in her keynote speech, sorry. The pandemic is likely to lead to lasting reduction in the level of potential output in emerging market and developing economies, and may cause potential growth to lose further momentum over the next decade, which is what we try to illustrate in the first chart. Investment is likely to remain well below pre-pandemic projections for an extended period of time because of some of the risks I just we just discussed. And COVID-related school closures are expected to affect learning outcomes, while prolonged spells of unemployment may also lead to deterioration of skills, all of which affect long-term potential output. The second chart shows that with economic activity rebounding, per capita income growth in emerging market developing economies is expected to pick up, of course, but among low-income countries, per capita income growth is effectively expected to be zero in 2021. So at this rate, per capita income growth in many EMDs, especially fragile, conflict-affected low-income countries, will fall short of the pace of recovery in advanced economies over the next 2 years. So in many economies, so this might slow or even reverse the pace of per capita income convergence with higher income countries, which leads me to the third point, which is that this is anticipated to worsen deprivation along health, education, and living standards with increased poverty headcounts, particularly in Africa and South Asia. As Ibu Mari mentioned, we project around 100 million people to have fallen back into extreme poverty by the end of this year. Next slide, please. Which brings me to the final part of the presentation, which is what are the implications for policies going forward. In terms of core macro policies, there's of course a very difficult trade-off between unwinding support to the economy on the one hand and managing internal and external economic imbalances on the other. So price pressures, which is illustrated in the first chart, are rising not because of necessarily demand increases, but mostly because of supply side factors also. But tightening of monetary policy in a context of high debt and negative output gaps has also the potential of triggering a negative economic spiral going forward. So these sorts of trade-offs will become much more, or in fact have started to become much more acute because of the global context. Similarly, for fiscal policy, the cumulative increase in government debt across emerging market and developing economies, which is illustrated in the second chart. You can see the blue bars rising very rapidly relative to what happened during the global financial crisis, will pose constraints on fiscal space going forward for many countries. Yet, the needs for household support, health support, and business needs are very significant, which call for continued global coordinated efforts for vaccine distribution, far-reaching debt relief, particularly for low-income countries also. Finally, on structural policies, addressing the rise in trade costs is one which we see as very, very critical, because this could have multiplicative, beneficial effects on accelerating exports and accessing, critical imported inputs. But structural reforms go much, beyond, including investment in education, connectivity, green infrastructure, all which are critical to boost boost longer-term growth. So in conclusion, the final slide, please. The global economy is set to expand. It's in its strongest post-recession pace in 80 years, but the recovery is likely to be uneven. In many EMDs, the obstacles to vaccine continue to weigh on activity, and per capita income losses are not going to be fully unwound in the majority of EMDs. So the global outlook remains subject to significant downside risks, and the policy challenges now are focused on balancing the need to support the recovery while safeguarding internal and external macroeconomic imbalances. So thank you very much, Bapak Kiki Veriko. I hand it back to you.
Thank you very much, Pak Habib Rep, for your very comprehensive and excellent presentations. And the global pandemic affect the global economy to be in the hibernation mode, and we need to make a response as soon as possible. And from your explanations, the vaccination rate is a very important and not only a successful story for one country, but across country in the globe, that we need to achieve the symmetric vaccination rate around the globe. And therefore, the global economy will recover together and in these pandemic situations, and thinking about the scarring effect and long-term effect as well, including the structural reforms during the pandemic, very important for the long-run economic growth. Thank you very much for your presentations. I'll be back to you afterwards. We continue at the moment with the next presenters, Pak Habib. The next presenters will be Pak Adi Budiarso. Please allow me to read Pak Adi Budiarso CV before Pak Adi Budiarso start his presentation. Pak Adi Budiarso is a head of a Center for Financial Sector Policy in the Fiscal Policy Agency, Ministry of Finance, and a chairman of the CPA Australia Advisory Committee Indonesia until 2022, and hold a professional doctorate in business administration from University of Canberra, and at the moment, yes, as I mentioned, Center of Financial Sector Policy. So, Pak Adi, I believe that you are going to present on behalf of Indonesia Ministry of Finance and from the Indonesian perspectives. So, without further ado, you also have 20 minutes, Pak Adi, for your time allocations. The Zoom screen is yours now.
Many thanks, Pak Kiki Veriko. Her Excellency Minister Sri Mulyani, Honorable Dr. Sami Al-Suwailim, Director General of Islamic Development Bank Institute, Honorable Ibu Mari Elka Pangestu, the Managing Director of Development Policy Partnership in the World Bank, our distinguished speakers, currently Dr. Habib, Dr. Sakir, Dr. Yap, and all of the distinguished attendants for this wonderful IFC conference. The COVID-19 pandemic has induced a global economic crisis that is far more powerful than previous crisis. For Indonesia, facing pandemic is quite difficult. Indonesia past strongest crisis was in 1998, the monetary crisis that was hit the economy by minus 13% and contribute the 2% of GDP cost to cover that crisis. COVID-19 pandemic currently is reached up to 4% of our GDP. It triggers the needs for improving the competencies of national, not only to be resilient, to be adaptive towards the consequences, but also to recover the economy. My presentation currently, I would like to emphasize three main things, which is the first in the global and domestic economic updates. And the second is on the policies for COVID-19 handling and the accelerating of the economic recovery. And the third, we would like to discuss and give more emphasis on the structural reform to enhance productivity and recover soon with the improving our Indonesian economic competitiveness. Not to mention the current sustainable financing that requires to support the pandemic is quite become not only Indonesia challenge, but the global challenge. That's why Indonesia currently would like to respond properly with the synergy and collaboration between macro financial policy measures as well as the structural reform. First, I would like to start with the slides on the epicenter of COVID-19 that keeps moving. However, the uncertainty remains high in all countries. As we can see from the slides, the United States hits the highest number of COVID-19 daily infection worldwide again. In the next slide, it's exposed to the recovery speed is likely to be uneven across the countries, and the world economy is predicted to recovery in 2021. Thanks for Habib that mentioned that after the contraction in the last year by minus 3.2, the global economy would like to grow this year by 5.32%. And in the next slide, we also can see here that the recovery rate and also the adjusting policy restriction to improve the recovery and strengthening the health protocol at the same time would like to mitigate the impact of the COVID not only in the central Java but also outside of Java. Following the fast spread of the virus variant, Indonesia economy will be slowed down a bit in this year after reach the highest growth in the second quarter, but we do believe that will be on just temporary while we are trying to improve the readiness for all regulators and all stakeholders to mitigate the risk associated with it. The momentum for sure will be the vaccination, of course, that we would like to maintain the momentum to recover from the highest or the strongest hit by crisis in the last year, minus 3.32%. Indonesia will continue expected to grow. In this next slide. Now we would like to see on the policies for COVID-19 handling in acceleration, especially to accelerate the economy. Indonesia currently focus on the accelerating of the not only help to handle COVID and the focusing for the most vulnerable one, but also Indonesia have the recovery strategy reform to not only prohibit the COVID spread, but also to recover soon. So some extra policies that we identify or we emphasize here is on the first, on providing stimulus to support reopening for the economy, and recovering reform policy covering first is the introducing of the omnibus law in the Cipta Kerja, or providing more jobs and encouraging more investment to accelerate the recovery reform, as well as the Indonesia current focus to support the fiscal consolidation. We just witnessed that across the year, last year and also will coming to this year and the next year, Indonesia fiscal consolidation will become the ultimate tools to strengthen the Indonesia resiliency towards the impact of the COVID-19, and also to support the structural reform and focus on what most important thing to support the economic recovery. And the next slide, the implementing countercyclical policy has been done perfectly by our budget. It prevents deeper contraction in the economy. As you can see from the budget, since 2020, Indonesia improved the capacity of budget to support the countercyclical by more than 33%, up until 2023. The strategy is actually how to expect the Indonesia resiliency in the economy, in the structural reform in the economy, and the finance can support the Indonesia back to normal to economy by 2023, and the minus deficit can be maintained below 3%. So that will be the tough challenge for Indonesia. Don't know yet when the COVID-19 spread or the new variant can be handled properly, but with the collaboration, with the synergy, with the macro financial synergy policy measures that imposed by the government, we do hope the COVID-19 pandemic can be mitigated properly. Next slide is on how we try to combine not only the vaccination and also survival recovery kit, but Indonesia policy measures will cover as well as the structural reform, as we already indicated before. So all of the agenda, we call it this national economic recovery since 2020, continued in 2021, and will be strengthened in 2022, but with the slow phase and going back to the new normal in 2023. Next slide. It is the what's so-called PAN, or the Recovery Economy Policy Measure, that projected from, we can tell you that Indonesia, similar to other G20 countries, when we face COVID-19, so we learn from the past crisis. How much we need to support for financing it, we learned from 1998, 2% of GDP, 300 trillion. But then it improved it in the midst of 2020 by 500 trillion. And now up to 744.75 trillion, which is already around 4% of GDP. Among G20 countries, Indonesia is actually, we would like to make sure that the policy measures in Indonesia trying to cope with COVID-19 is well harmonized and coordinated with the G20 or global policy measures to support the resiliency, adaptiveness, and also the economic recovery. So among other 5 key instruments, which is first is on the health, social protection. The program is actually support for workers and also for works or for small medium enterprise, as well as for some of the key pilot areas such as tourism and trade, as well as the other key ultimate sector. The next slide is when we would like to see here the impact severely is on the most vulnerable one. Poverty and unemployment are expecting to be able to be mitigated with the PAN program. It's been experiencing downward trend, but for sure Indonesia is still focusing on how to improve capacity to support the economy by maintaining the low rate of the unemployment and the cost of the crisis. In the next slide, if we want to explore further, as we see here, the fiscal consolidation is actually successfully carried the anticipative action, and also focusing on several budgets that can be targeted to the better target to support the resiliency. But for sure, the deficit will be just only planned to be up until 2023. So in 2022, the proposed budget deficit, which is we will be maintaining at 4.85%. I think it is the way we would like to provide what's so-called the smooth trajectory after the severe or the highest tough facing by Indonesia crisis in 2020 and starting improving 2021, and then we will try to fully smooth trajectory in 2022. Next slide, sorry. Proposed budget posture. This is actually trying to promote also flexibility to anticipate the uncertainty. All budget measures, for example, because the government focusing on still improving the budget to support the counter-cyclical measures. Even government at the first year, we promote support even from the reduction of tax revenue, which is providing more support for small medium enterprises, tax burden by the government, etc. And the pricing of the reduce of the state revenue creates the consequences of the government to improve the capacity to support it with the financing, which is at the first year 14%. That was the highest rate of the per GDP for the deficit in that year. But that will be gradually mitigated and then fully back to normal in 2023, as we already indicated. And the trend was been quite clear here, where the tax revenue improved growth is 9.5%. And we still continue to improve the counter-cyclical measures, which is the growth of the capital, the state expenditure is at 0.4%. Next slide. Now I would like to more focus on the structural reform, enhancing the potential of the government to mitigate the potential of Indonesia to support sustainable financing. As we may already aware, the cost of the crisis of the pandemic is quite similar with the cost for climate change, actually, more than 2% of GDP. This is similar, this is actually Indonesia currently exposed our readiness to support how to finance this crisis. The next slide. The strategy that we already imposed in the first year of the crisis and the introduction of the Omnibus Law in job creation. It is actually the fundamental reform in 10 important areas that promoting creating potential jobs, and then increasing efficiency, regulatory reform, as well as increasing potential competitiveness of the country to tap more funds from overseas, from internal, as well as the trust to support the ease of doing business. The next slide, the next strategy is actually on how to improve the potential of Indonesia Investment Authority as part of the Indonesia Sovereign Wealth Fund. This is the way the government committed to, as transparency as we can support the Indonesia recovery by the development, by strong fundamental to recover as early as possible. So the Government Investment Authority is actually the tool or the vehicle of the government, which has so many advantages because it can focus on maximal capital creation, support by state, and then strong support independent professional, as well as it will be able to tap also into the new economy in the future, which is the climate or green investment, as well as the green economy. The next slide. So in terms of the potential in the COVID-19 for growing in the financial sector is the welcoming the fintech or the digital economy. Indonesia currently has one decacorn, and we have 5 and probably more unicorn. And the digital financial inclusion with fintech can be accelerated. Indonesia, small, medium, and micro businesses covers 99% of the economy. So once we focus, including the Syariah economy is part of it, with the digitalization, we do hope, as Ibu Mari Elka Pangestu mentioned, will do support the financial inclusion and lead towards better off in the inequality. Next slide. Indonesia also would like to cope with the structural reform that we need to be put in place to support the digital economy put in the framework. The current laws is not available yet for small medium enterprise financing, especially also for fintech. But for sure, the policy regulation will also enable us to support the infrastructure, to provide the mechanism and ecosystem to support inclusion, empowering the digital small medium enterprise into the financial sector framework, and as well as the supporting consumer protection and supervision, as well as the law enforcement. Not to mention that we need to also improve the capacity of the human behavior, human capital in it. Next slide. Currently, government also exposed or understand that we need to review back on the internal capacity to support sustainable financing, which is in terms of the saving. Indonesia's saving in terms of the pension, for example, currently, we still have enormous potential because our current pension is just only 6.30% per GDP. Compared to Malaysia, is already 60%. And Australia is already 130%. So Indonesia is planned to support the growing of the potential. I think this is the one that we need to work together, because in terms of the literacy, in terms of the inclusion, we need to work very hard to make sure that there is a quantum leap change, that there is a cultural change for Indonesia to be consider the potential role of the financial sector to support the sustainable financing. So this is actually the way Indonesia can also win the future, when the accumulation of the pension and insurance, as well as the capital market and banking, can support the sustainable financing from within, from our own Indonesia development. The next slide. So Indonesia is currently also reviewed back on the role of Islamic finance. Indonesia financial sector is dominated by the banking, actually. And the Sharia economy as a whole contributed around 10%. Indonesia potential in the future is still huge. That's why one among other things that we would like to focus is on how the role of the Indonesia Islamic finance to support financial inclusion for small, micro, medium enterprise, and how to make sure that all of the financial sector area, which is currently we noted, banking, Sharia banking, Sharia insurance, Sharia pension, Sharia capital market, Sharia fintech, and also Sharia innovative financing, such as Aukhaf global sukuk ideas, and then the crowdfunding. So all these numbers signifies that there is a need for transformation. There is a need for continuous effort for synergy, not only from fiscal, but also from macro, monetary, financial measures, macroprudential, as well as all of the key stakeholders, not only in the central, but also in the local government. Indonesia also exposed to the future will be, as Ibu Sri Mulyani and Ibu Mari Pangestu mentioned, is on the welcoming of the future economy, which is not only digitalization, but also on the climate change, on the green economy or carbon economy. That's why Indonesia will be exposed also to tap into more potential for supporting financing through that channel. Next slide. Islamic finance development strategies that we already indicated through the work of the omnibus law financial sector, that's all the work that we're still doing, is we would like to focus on the 4 key strategies. First, in improving financial literacy. That's also leading towards the transformation of the culture in terms of how to campaign the role of the financial sector, particularly Islamic finance campaign, to support the economy, to support the welfare, to eradicate the poverty, to support the readiness, improve the resiliency towards the impact of the COVID-19, improve the HR capacity or human capital capacity in terms of the training and providing certification for professional support for the Sharia economy finance. The third is Islamic finance ecosystem development. Currently, there is no proper yet in terms of the micro and small medium enterprise financing support. So we will put it in the law, and we're trying to make sure that the identification of the business opportunity, as well as the capacity, as well as the way the government might be able to tap more funds from within, from improving the inclusion, improving the tapping into the pension, as well as to support the whole economy through banking and also capital market. The government support for sure, Indonesia is committed to finalize this within this year or next year. And we do hope that the legal basis will also be able to be enacted in the omnibus law or the new structural reform after COVID pandemic in this year. The inclusion Islamic finance for sure, that will be also not only Indonesia, but we need to gather together the collaboration among other jurisdiction as well, and also the G20. We will try to include that into global financial partnership, financial inclusion in G20, while Indonesia will become the presidency of G20 next year. Next slide. So this is the way we would like to promote the improvement or the strengthening of the Indonesian financial sector. We already committed to review on the 7 or 11 laws associated with the financial sector in Indonesia, including banking, capital market, pension, insurance, and as well as all other laws. And we would like to strengthen the financial sector in terms of 5 pillars, which is supporting the financial services, promoting long-term source for finance, improving competitiveness and efficiency of the financial sector, developing new instruments and mitigating the risks associated with it, and also the protection of the consumer and investors, as well as the enforcement of the law accordingly. And that's also promoting the strong leadership and coordination among jurisdiction in the macro and financial sector in Indonesia to develop deep, innovative, efficient, inclusive, strong, and stable financial sector to support sustainable financing, to combat not only COVID-19, but also to welcoming the era of climate change, where Indonesia need to also not only transform, but we also must be ready to face that for to support Indonesia development in the future. Last but not least, in terms of the Islamic finance reform, we have 4 keynotes here. We need to improve or increase the comparative advantage of Islamic banking in the region and promote consolidation of Islamic finance cooperation, again, not only banking, but also insurance and other financing sources in the financial sector, such as fintech, capital market, as well as the crowdfunding, also innovative financing in terms of this Islamic finance. We need to also multiply the number of instruments through product innovation. We must make sure that the involvement and improving the trust will also attract more participation and contribution from the people. And then at the end, last but not least, we need to collaborate all of the strengthening process on the Sharia insurance or Sharia economy as the whole, Sharia pension as well. We need to strengthen the whole regulatory framework that will enable Indonesia to not ready to cope with COVID-19 pandemic consequences, which is cost Indonesia is already 4%, but also in the future, Indonesia will be able to sustain the great potential to recover soon and grow better. Thank you very much. I think this is all for my presentation.
Yep. Thank you very much, Pak Adi, for your very detailed presentations. So if I can make a briefly summary from this presentation, starting again amid the pandemic, global pandemic situation, which creates, if before Pak Habib mentioned about the effect of the global pandemic, which make the world economy become into hibernations mode. Pak Adi mentioned another keywords here about the uncertainty given the growing variants from the variants of concern like Delta, which made very different into Indonesia recovery. As you may know that number of fatalities 60,000 for 16 months from previous or before the Delta, but with Delta we have another 40,000 only within a month. So this is like 10 times more fatalities rate, and then 5 times more infectious rates with this Delta. So the uncertainty coming again to the Indonesia economy. There's a very interesting approach explaining about policy response, how to deal with the decreasing the aggregate demand side from the Indonesia economy with the national economic recovery program from health, socioeconomy, how to support small medium enterprises, and also productivity side, and also tax incentives. And this show that Indonesia have like a V-shape rather than U-shape for economic recovery. Now we just record 7% of economic growth in quarter second 2021 year on year. And details response, as you may know, that Pak Adi presents about also in connecting with the Islamic finance, and with four milestones: increasing comparative advantage of Islamic banking, promote consolidation Islamic finance corporations, multiply number of instruments, and so on, and strengthen regulation and legal certainty for all the Islamic finance development. So also discuss about Islamic finance as well as G20 for Indonesia next year presidency. Thank you, Pak Adi. This is very details and comprehensive from Indonesia perspectives. So we will continue. As I mentioned, we open the question and answer after the all the participants, all the speakers presenting their thoughts. So the next presenter will be Pak Riyad M. Al-Khaif, Deputy Minister for International Affairs, Saudi Arabia. And before that, he was an alternate executive director of Saudi Arabia at the IMF, and also head of studies before that, again, division at the Saudi Central Bank, or abbreviation SAMA. And from education background, Mr. Al-Khaif hold a PhD degree in economics from University of Kansas. I suspect a classmate of the head of Fiscal Policy Agency of Indonesia, Bapak Febrio, also from Kansas University. And Pak Al-Khaif also represents Saudi Arabia at the G20 Framework Working Group, FWG, for 3 years, and also involved in the G20 presidency in Saudi Arabia 2 years ago. So I think it's also very valuable for us to hear about his experience and sharing with us about the G20 experience of the Saudi Arabia presidency. So without further ado, Pak Riyad, the Zoom screen is yours.
Thank you very much. And at the outset, I would like to take this opportunity to thank the organizers for the high quality work. I am also pleased to be part of the 5th Annual Islamic Finance Conference. Before I talk about the G20 and the human development in Saudi Arabia, I would like to take this opportunity to congratulate the Indonesian authorities in advance for hosting the G20 next year. We wish them every success. When it comes to the G20, Saudi Arabia has been successful in delivering the G20 agenda. As you remember, the G20 during the Saudi presidency, it was exceptional because we've seen an exceptional year of the COVID-19 crisis. And by all terms and by all matrices, Saudi Arabia G20 presidency was successful, not only because of the domestic influence, but also when it comes to the international agenda to tackle the COVID-19 crisis. So on the global level, the G20 response has been strong, timely, and well-targeted. And I can explain how it was articulated. So when it comes to the strong, as you know, the G20 presidency and the G20 members have provided a stimulus support to tackle the crisis by more than 10 trillion US dollars, and I mean trillion. That is by all means is a very high number to support the global recovery. When it comes to the well-targeted aspects, as mentioned by previous colleagues, the G20 presidency of Saudi Arabia has focused on distributing and providing access to vaccination and healthcare services, particularly for low-income countries where they have a lack of resources. We have seen a clear indication from many countries to support the Saudi initiative to provide vaccination. Saudi Arabia by itself provided 500 million donation for the vaccination field, which contributed to distribution of vaccinations, allowing more access to healthcare and timely support to those in need. On the other side, when we mention well-targeted, also it is very important to note that part of the crisis, the COVID-19 crisis, was due to lack of fiscal space. And I've seen Dr. Habib mentioned this point, and it's extremely valid. Because many countries did not prepare very well to face this crisis. They did not have ample fiscal space to provide for healthcare and social contribution. And the G20, through the Saudi G20 presidency initiative, in cooperation with the Paris Club, they have provided the debt service suspension initiative, as well as the common framework to help create fiscal space for countries in need. We are pleased to note that more than 5 billion US dollar has been provided to countries in need, which covering more than 40 countries. Overall, we expect the recovery to be robust. And in fact, Saudi Arabia shares Indonesian projections of the global economy that both countries will see a V-shaped recovery. I also support the projections shared by the World Bank colleague about the rebound this year in growth, while noting the downside risks from the variant of COVID-19. Also, when it comes to the G20 Saudi presidency, it is very important to take into account the importance of enhancing social protection and social spending. And to this end, the presidency focused, one of the key priority is on enhancing access to opportunity for the benefit of all. As you know, the recovery and growth is not inclusive everywhere. And in countries in the region where we have a high proportion of youth and women, it is very important to ensure that the recovery is inclusive. And I can share specific examples in the Saudi economy where we had succeeded in enhancing inclusiveness. Saudi Arabia, like Indonesia, they are young, they have young populations, and the demographic dividend is extremely high. We are not an aging society, and investment in human capital, it is one of the best investments and return to government spending. And if we look at a definition of social spending, it comprises two elements. On one hand, it includes social protection, and on the other hand, it includes healthcare and education spending. And in both categories, Saudi Arabia succeeded in providing ample resources for social spending. The budget this year, which takes into account the COVID-19 response, allocated more than 30% of its resources to provide social spending. Education and healthcare has been the top priority of the government, and we are pleased to see very positive outcomes in terms of COVID management in the Kingdom of Saudi Arabia. And as you know, Saudi Arabia even have more responsibility when it comes to management of COVID crisis through the pilgrims hosting, given the holy sites of Mecca and Medina. And as we have all seen recently, it was extremely successful pilgrim visits to Mecca. There was no recorded cases of COVID cases, and the vaccination was provided for all pilgrims for free and access to healthcare with free costs. So overall, it was successful. When it comes to the other priorities of the G20, it is very important to note that while we need to focus on the short-term stabilization given the COVID shock, it is very important to keep an open eye of the long-term challenging environment that the global economy will face, particularly when it comes to inclusiveness and climate change. And to this end, the Saudi Arabia has provided a climate change initiative, which is called the Circular Carbon Economy, which was endorsed by all G20 leaders, enhancing access to energy and ensuring clean and affordable energy access. It is a top priority for the G20 presidency under Saudi Arabia, and it was very successful, thankfully. When it comes to the inclusiveness, also we covered this issue in different forms. One of the forms that we've mentioned inclusiveness and it relates to this forum is inclusiveness when it comes to financial inclusion, utilizing fintech, integrating the technology to provide support for women, for youth and underbanked sectors. That was also a focus of the Saudi presidency, and we have made significant impact, hopefully, for the G20 in Indonesia to take over the agenda from Saudi Arabia. And I'm very happy to note from Her Excellency, the Finance Minister of Indonesia, that the Indonesian authorities will focus on the recovery together and stronger. This is indeed the definition of inclusiveness. On one key aspect that also Saudi Arabia G20 presidency focused on, and we think it is extremely relevant to the COVID crisis, is to leverage technology. As we know, technology is a multifaceted tool. It involves all sectors: human, agriculture, education, healthcare, banking sector. And we have seen the powerful tool of technology to help countries manage the crisis very well. I can give a clear experience of the Saudi case. Thankfully, in Saudi Arabia, we had a very robust infrastructure when it comes to technology and innovation. We invested heavily ahead of the crisis to build our infrastructure in connectivity, on internet connection, as well as in the Internet of Things and the fourth industrial revolution. So when the crisis hit the global economy, we have not seen disruption in the key sectors. Education and healthcare services have been provided without any disruption. We've used technology to manage the healthcare situation both proactively and reactively, educating people about the risks of COVID, having accessibility to healthcare services through technology without human-to-human interface. That has provided a good hedge against the widespread of vaccination, widespread of cases in Saudi Arabia. That was a clear success story. Another important element of technology was providing education services and providing schooling for students remotely. We have seen great access to technology and schooling from home without having physically going to schools. The government distributed laptops, computer devices to students to ensure access, including for those that are less fortunate. When it comes to government services in general, including from the Ministry of Finance, it has been robust. Payment to the private sector has been smooth, and if anything, it was augmented during the crisis to ensure abundant liquidity and support for the private sector. Both individuals and government-to-government transactions was conducted through technology and through infrastructure means, including through I'timad platform and other platforms that enabled a smooth government support and services to the public. When it comes to the backbone of transactions, the banking system and the financial sector also has performed very well during the crisis. We have not seen any disruption in liquidity as well as credit to the private sector and to the public sector. Banks performed very well in terms of providing access to credit to the private sector, and we have seen a good lending and healthy lending to the private sector without a noticeable increase in the non-performing loans or disruption and shortages in liquidity. In part, thankfully, to the SAMA, the Central Bank of Saudi Arabia intervention to provide additional liquidity to the domestic economy. Also, when it comes to innovation, it is very important to take into account the risks that comes with technology, including the cyber risks. And also, proactively, the government took at an early stage an initiative to enhance the cybersecurity in the system of Saudi Arabia, and we have seen it bearing fruit during the crisis. On the G20 and the focus on youth, and since Saudi Arabia shares many elements with the Indonesian economy when it comes to the demographic dividend, we think it is extremely important to focus on understanding the linkages between fiscal policy and human development. There is a clear link and nexus between the two. And in our view in Saudi Arabia, we have seen a positive feedback loop between fiscal policy and human development. As you know, fiscal policy is a proactive and active policy tool that has been used in the kingdom. We spent generously on education, both at universities in the kingdom and schools in the kingdom, as well as abroad. When it comes to our youth and women, we have seen positive outcomes. Women literacy has improved significantly over the past 2 years. Also, when it comes to seeing women in high-profile jobs and leadership positions, that was a clear success of the government support previously in women empowerment and women providing access to education and affordable healthcare and actually free healthcare. That we have seen the benefit of that bearing fruit in seeing more women and more youth in leadership positions in the kingdom. When it comes to the kingdom relationship with the global economy, we are clearly demonstrated a leadership standing to the occasion and facing the crisis from a position of strength. Part of the G20, we provided support to countries in need. I'm happy to announce that Saudi Arabia has the third rank when it comes to providing donations to countries during the COVID-19 crisis. This exemplifies the belief of Saudi Arabia that it is our shared responsibility to ensure an inclusive global recovery. With these remarks, I stop here. Thank you.
Thank you very much, Pak Riyad, for your very valuable insights, sharing with us, starting with the experience, invaluable experience of Saudi Arabia for G20 presidency. This really invaluable for us to learning from, because the Saudi Arabia is the first country that hosts and then as a G20 presidency during the pandemic, and Italy followed to this year, and then Indonesia next year, and we suspect that the pandemic, global pandemic, is still with us even until next year. So this is very interesting and valuable insight for us. As for the vaccination, to achieve, to accelerate the vaccination for a country that lag behind, donate by the Saudi Arabia, and given the also considering the lack of fiscal space for all the countries for this unprecedented event, and all the countries have to apply a measure counter cyclical or fiscal policy to help the economy. And inclusiveness, as you mentioned about the fintech utilizations, optimization of the fintech platforms during the pandemic, and given the prolonged and scaring effect of the pandemic to the global economy, that you focus on. You mentioned about the health and education's effect, in particular for sudden shifting of the educations from offline to online, which Saudi Arabia donates significant devices for the most needy household, given the lack of the device or unavailable device for the household. And thank you very much. Also, you mentioned about the private sector support as a jump-starting an economy in Saudi Arabia the pandemic. All right, so we continue. In my calculation, we still have around 30 minutes to question and answer session. And let me start with one general questions to all of the participants about the how the Islamic finance support the economic recovery during the pandemic, and how we jumpstart the economy with the role of Islamic finance, again, both sustainable and inclusive at the same time. So I'm trying to put us back into the theme of this discussion. The idea is how to improve and accelerate the Islamic finance role into this economic recovery hand in hand with the conventional finance system. So maybe I start with Pak Adi, because Pak Adi already mentioned about this. So can you elaborate just briefly about these questions, and then follow by Pak Riyad, and then Pak Habib. Pak Adi, Zoom screen is yours.
Thank you, Pak. Thanks for the question as well. In fact, Indonesia currently exposed to the great opportunity for demographic dividend from now on until 2035. So that means in terms of the, Pak Kiki mentioned about conventional financing, but I think this is kind of universal financing. We need to save while we have a strong potential to work, isn't it? That's why in terms of the number, insurance and pension, currently Indonesia insurance pension capitalization is up until now is just 11% per GDP. So that means if we would like to seek the acceleration, the reform, I think it will be great potential for Indonesia to save more. For example, even in the household, try to transform the habit of saving in terms of even pension in Sharia. So now we try to explore the development of Sharia pension as well. When we have in collaborative terms, Sharia pension and pension as a whole in the nation, try to lead at least 60% by 2035 or 2045. That means in Indonesia, there will be another 5,000 trillions to support the economy or to be capable to improve the capacity of capital market, of the banking, to support in terms of the business credit, as well as in terms of supporting the national development. So that is actually the basic idea. And the second, Indonesia current financial development is under development stage. All of the previous laws, for example, in the pension law, is just already too old, like 20 back years ago, in 1992 or 1996. Capital market, banking, as well as the insurance, all of the regulatory framework need to be revised. In addition to the welcoming of the digitalization era, during pandemic COVID-19, digitalization has already become a key game changer currently. I think even for millennials, they not even ask about more food or more shelter. They ask more data, isn't it? So that means in the digitalization era, I do believe, and I really agree with the previous speaker, Pak Habib, as well as the keynote speaker today, Ibu Sri Mulyani and Ibu Mari Pangestu, that the financial inclusion can be accelerated with digitalization. That means Indonesia exposed to the great potential for the transformation in terms of strengthening the regulatory framework in the financial sector, especially for financial Islamic financial sector, especially. Currently, as we already indicated before, Islamic all financial insurance, banking, capital market, as well as pension, all covers already 10 or 11% in the total of economy on the financial sector. The financial sector in Indonesia is still dominated by the bank, but at least now we started to understand that when we try to focus more on the improving the capacity of the regulatory framework and the national habit to save more for pension, for insurance, and for also the sustainable financing source of finance, participate in the society. I think that will be Indonesia reach our highest potential to support even combating the pandemic, facing the climate change era, as well as to support the green, also energy transition to Indonesia more developed in the future. Thank you, Pak.
Okay, thank you, Pak Adi, for your response. Very well noted. Pak Riyad, maybe you can share with us the role of Islamic finance. Of course, Saudi Arabia is one of the best example that you may share with us, including also the experience that related to also Islamic finance from the G20 presidency that Saudi Arabia experienced with 2 years ago, given these pandemic situations, and then for the economic recovery in relation to the inclusive growth purposes. Pak Riyad, if you have any comments on this.
Yes, I think the role of on Islamic finance, I think it is a country-specific challenge. When it comes to young countries like Saudi Arabia and Indonesia and others, it is very important to take into account the demographic aspects of the country and the abilities of the citizens and people on leveraging Islamic finance. And I can give a clear example of the fintech. In Saudi Arabia, youth and women in general are very tech savvy, and we need to link the fintech with the financial inclusion agenda. They both go hand in hand. So the more fintech innovation activities that you could provide in the financial services, the more inclusion of a lot of youth and women into the banking sector. I think both are interlinked, and it is a joint responsibility. It is from the government responsibility, it is from the financial regulator responsibilities, and it is the public responsibility to comply with the financial rules and responsibilities. As you know, with fintech, you see innovation, you see improvement in lending and activities, but at the same time, you see vulnerabilities when it comes to preserving financial integrity. And it is extremely an important aspect that authorities, and I can speak on the behalf of Saudi Arabia, that we are very cognizant of the risks when it comes to financial integrity and the need to provide more financial access. So it is a balancing act to provide greater financial inclusion, but it doesn't have to come on the expense of compromising financial integrity. I think this is very important to mention. Thank you.
Thank you very much, Pak Riyad, for your explanation and given sharing experience from the Saudi Arabia side. I'm going to Pak Habib. So as Pak Riyad mentioned about the impact of the pandemic on youth and women in this situation, which affect the economic and also part of the economic recovery. So as a part of the solution, Pak Adi also mentioned, Pak Riyad also mentioned about the role of fintech as a tools to achieve financial inclusion and also at the same time as tools to help economic recovery, to help the people to be involved in the economy, especially youth and women, which affect much from the pandemic. I believe that the World Bank also notify and also notice about this impact. So what do you think, Pak Habib, for the role of this fintech and the role of Islamic finance, if you have any comments on for the economic recovery across the countries? If you have a comment, Pak Habib.
Yes, thank you very much, Pak Kiki. Just to add briefly to the Deputy Minister and Party's comments, I think there could be three potential strong benefits. The first is that Islamic finance can provide non-debt creating sources of finance in environments which are already quite significantly leveraged. So that's one important benefit. It can also provide risk sharing instruments also. The second is that it can help to diversify financial instruments for those that are either not willing to access more traditional sources of finance or simply not able to because of financial sector frictions that prevent lending to particular groups, including the youth and women, as you had mentioned, Pak Kiki. And then the third is that it could also help to channel global liquidity from parts of the global economy that have excess savings to parts of the global economy in countries where there are large savings investment gaps. So there is potential for Islamic finance to leverage this global liquidity also. But for this, I think one needs several enabling factors, which both Padi and Riyad already mentioned, and one which you alluded to, Pak Kiki, for example, on fintech. And here, I don't want to repeat what you already said, that this can be a significant driver of Islamic financial inclusion, both from the perspective of enabling people to pay, contribute zakat, increase transparency, but also access finance in parts of the country where traditional banking systems do not necessarily have the reach. But I think it also requires what Pa Adi was alluding to on the ecosystem for Islamic finance, providing financial literacy and education so that people understand the benefits of different types of instruments. And of course, the regulatory framework, which both countries like Saudi Arabia, Indonesia, but also Malaysia can share a lot of good lessons learned on. Thank you very much, Pak Kiki. Over back to you.
Thank you very much, Pak Habib, for your clear explanations on this issue. Okay, I will go to the participants' questions that already received from the question and answer button. If you can also check from your Zoom screens, there's a question and answer. So I will read questions. I think the first question that in general similar to questions that passed by Pak Muhammad Iqbal. So I continue to another participants. So the first Asril Maulizal, his question is the biggest obstacle of the Sharia economy in Indonesia. I think this is for Pak Adi Budiarso, Pak. So what is the biggest? Okay, please hold on. I will finish the first three. The second, followed by that, Pak Sugeng Triwibowo, asking about the comparisons between Sharia capital market and Sharia finance. While Sharia capital markets, from his perspective, robust and agile in response to the pandemic situation, but Sharia finance not. So the question is how to increase and support to accelerate the recovery through the Sharia finance. So his question is more on the Sharia finance in comparison to the Sharia capital. I think this is also to Pak Adi, or maybe others, Pak Habib also have observation on this, the comparison between finance and market of the Sharia. And then Pak Lukian Tamani, he asked about the impact of the pandemic. This is in Indonesia case. He asked about the existing laws, and then comparing the omnibus law. I think Pak Adi also mentioned about the omnibus law as a core of the structural reform in Indonesia, and he asked about that in relation, I think, with this recovery, economic recovery, the reform, and in connection in Islamic financial system, if you may, Pak Adi. And last but not least for this session, the questions from I think from Raihan Rakananda. He asked about the international trade, so the role of the financial for the international trade. I think how this connect to the international trade, to the global economy, to the international finance. So not only looking at for the country level, but also for the global. And I think it's also good if we can connect this with the country experience to the global finance, Islamic finance to the global finance, how to connect with these two. I think Raihan passed this question to Pak Adi and also Pak Riyad. So these all the questions. If you miss what I read, you can also see, you can read in the question and answer session. And for this, I think because I'm mostly asking to Pak Adi, so I start with Pak Adi and then directly follow to Pak Riyad and then Pak Habib. Please, Pak Adi.
Thank you, Pak Kiki. I read all of the question. I will try to explain it in such a way that we try to also explore some other concerns as well. First of all, on what are the greatest challenges of financial Islamic finance in Indonesia? I think it's quite in line or quite hand in hand with the challenges that exposed to Indonesian financial sector. Current Indonesia financial sector contribution to support investment is just only 11% overall. So that means most of the funds associated or used to business mostly by our own pocket. So that means we have a great challenge. So if I want to mention one greatest challenge is because we are not growing at our highest potential. That's why in terms of the numbers, all of the financial sector in Indonesia are still underdeveloped. Even if you would like to compare to other economies, such as in the banking, capitalization, capital market, pension, insurance, as well as other. But quite frankly, Indonesia also exposed to the great potential, for example, in terms of Sharia fintech. Sharia fintech Indonesia is tapped into potential like 3 billion, around 2.9 billion, yeah, in business. That means already pick 5 in terms of the greatest potential. But if we try to back to the fundamental, how much even individual or millennials contribute to saving, to pension, or to saving for the long-term period of time. Indonesia just only 6%. That means not enough. Compared to other countries based on ILO standard, you must contribute 10 or even probably 15% of your salary every single month, of your take-home pay every single month. That will enable us to provide welfare life after pension, which is 40% of our take-home pay after pension. So that is the basic standard. For most Indonesian, we contribute less than 2% of our take-home pay salary, and we will earn less than 20% of our take-home pay after pension age. That means we have a problem if we do nothing until end of the aging population, which is 2035, while Indonesia will have another 35 million old people. Yeah, that means we need to consider how to support the need of the people. So that's a basic foundation. But when we would like to listen about literacy and inclusion, Indonesia inclusion currently at the level based on the OJK survey is the 78. So we try to commit to 90% financial inclusion. So the strongest push to financial inclusion is digitalization. For example, fintech currently can reach around 16 participants, 16 millions, while ultra micro or even core and micro financing just only reach like 5 or 6 million in the total. That means the acceleration can be successfully supported by fintech development. But frankly speaking, the fundamentals like banking, Sharia, and insurance practice already been in the regulatory framework. But PPP, protection for pension, for insurance, not yet developed. For fintech and for social financing or small micro enterprise financing, we need stronger regulatory framework in the law basis. That means, as well as the Sharia or the Islamic financing, we need to have a better regulatory framework to support the development. But the second or the first priorities that we would like to introduce is on the inclusion and the literacy. The financial literacy in Indonesia overall is still under 30%. And to PT on the insurance and pension, just only 10%. That means we need to have a quantum leap or transformation in terms of habit, in terms of how to make sure that the digitalization, the development of the financial sector can be transmit the importance of this to support the economy, to support the effort of the government to combat COVID-19. COVID-19 for practically for the particular reason needs a stronger sustainable financing capacity. For example, in 2001 and 2002, we have improved our capacity, but the risk is still there because we have been exposed to the new variants of COVID. That means we need to explore another financial source of fund, which is that can be happen by improving the potential of our capacity to increase the tax revenue or to increase the development of the economy by providing more resource of finance from banking, capital market, as well as insurance and pension. So that's the regulatory framework or the ecosystem that currently we are trying to review. Indonesia is still trying to expose to the greatest potential for the development, but for sure that needs synergy. Yeah, not only at the central, but also to the local level. Because like, for example, pension, it also covers not only state apparatus at the central, but also at the local level. Corporation, now even BPJS or the Social Security for Employment, the participant or the membership is not that high as the jump source for health, which is up until 80%. We just only reach less than 20 million employment social funding membership. That means we need to cover more. To cover more means we must be able to encourage people to save more from their pocket, make use or set aside from contribution to consumption or to the data, the data package to more at least 5% or 10% from take-home pay to save. Put it in the financial sector, put it in the Sharia pension, put it in the Sharia fintech business, put it in the financial sector as a whole to make them work for us, to make them capable to support us, to cope with the, to improve our resiliency across the all of this financial and the sectoral economy to face the COVID-19 as well as to face the challenges in the future. That's probably from me, Pak.
Thank you, Pak Adi. It's really clear message here that we need to run faster before the aging populations period coming. but at the same time, we need to accumulate the saving, which we know I think all the developing countries, including Indonesia, are facing a saving investment gap, and that's represent into the shallow financial market, as you said, biggest challenge to Indonesia. So at the same time, we need to. So the key is increasing the economic growth, increasing the saving, and that will affect all the instruments, financial instruments that you mentioned, both conventional or Sharia or Islamic finance. Thank you very much, Pak Adi. Really excellent insight. So, Pak Riyad, maybe you have a comment that related to the questions that I mentioned before. The Zoom screen is yours, Pak Riyad.
Thank you. If I may, I just wanted to add to what Dr. Adi mentioned. I think when you look at the macro picture, it is about the saving and investment gap. So you have, in one part, you have a saving glut, mainly from advanced economies, partly unexplained by the aging population, the need to save. But on the other hand, you have emerging markets and low-income countries with investment needs. Infrastructure investment is huge. And to channel this between saving and investment, you need to look at country-specific circumstances, because it is not only about the banking sector or the financial market, but it is all about the macroeconomic policies and structural reforms that are implemented by each country individually and collectively. In trade finance, it is extremely important for enhancing investment and trade between emerging and other countries. But when it comes to using Sharia compliance or financial solutions, I think you need to take case by case, to look at this case by case. And I think Dr. Adi mentioned a good point, not only savings between countries, but also savings within countries. So you have a different part of societies. You have income gap, where the most wealthy individuals have huge assets in the banking system, yet SMEs and low-income individuals do not have access to financing. So each country has to look at this using case by case. Overall, it depends about how which sector is dominant. So is the country is more bank-based finance reliant, or is it more market-based finance? In the case of Saudi Arabia, we have focused on both, to be honest. We have a very robust banking sector. They are well capitalized, liquid, and they have proven to be resilient throughout the crisis, including the recent COVID-19 crisis, where we have seen an uninterrupted credit to the private sector with a double-digit growth in lending. When it comes to access to finance and trade, I think it is very important to look at the regulatory environment, the doing business, the solvency and the bankruptcy legislations, as well as the nexus between fiscal policy and financial markets. Because as you know, the more public debt is taken by the public, the more synergies between financial markets and debt and the public sector, which will create sometimes unintended consequences during downturns, as we've seen some countries with highly leveraged debt to GDP ratios have seen a crowd out effect for lending to the private sectors and sectors in need. So all of these you need to take into account when you assess the situation. Overall, I think fintech will be a good tool to expand the horizon of Islamic finance, coupled with financial literacy and education. That will be, I think, a good enabler for the thriving sector. I stop here.
Thank you very much, Pak Riyad, for your clear explanations on this issue and taking into macro perspective saving investment gap, and remind all of us that this is the also the necessary conditions to be think about. Pak Habib, if you have comments on this, if you still have 10 minutes.
Thank you very much, Pak Kiki. It's difficult to add to Pak Riyad and Padi's excellent responses. But, so I've just mentioned three very quick issues which they already covered. The first is relating to the two questions that you posed on the role of structural reforms and trade in the recovery. But I'll start with the financial sector, which Padi touched on, that the reach of the financial sector, but also its depth, is likely to have multiplicative effects, not just in terms of channeling savings, from to more productive investments, but also on the effectiveness of fiscal and monetary policies. There are a lot of studies showing how financial sector depth improves the effectiveness of both fiscal and monetary policies. It's almost tautological. It helps you raise more taxes to address a lot of the social sector education challenges that Riyad had mentioned in his speech, the challenges of aging population that Adi also mentioned, but it also helps to improve the monetary transmission mechanism of monetary policy as well. So that's one overarching point I wanted to emphasize from Riyad and Adi as well. The second is, complementing this are structural reforms, that help lift constraints and enable free flow of resources across the economy, much like the investment liberalization reforms that Indonesia undertook as part of its jobs omnibus law, which really helped to address critical market failures for the transfer of knowledge, the adoption of new technologies, the provision of long-term finance and so forth, which are all important to attract foreign capital, including FDI, to plug the savings investment gap that Riyad had mentioned. And this is particularly important in the current environment because you want growth to accelerate through a supply side response at a time when fiscal policy will need to consolidate, right? So these structural reforms are particularly important they're always important, but particularly in this environment, which leads me to the third and final point, which was your second question, which is an important subset of these structural reforms are trade-related policies. So, how to accelerate trade reforms and reverse some of the protectionist trade tendencies that we've seen over the past months during the pandemic, which really not only restrict export markets, but prevent access to critical imported inputs, which are essential for productivity and value addition in your domestic sector, growth of your domestic tradable and non-tradable sectors. And this, I think, is one which can be aided by trade finance, including Islamic trade finance, as some of the speakers have already mentioned. Thank you very much, Pak Kiki. Back to you.
Thank you very much, Pak. Thank you very much for also discuss about the effect on the export and tradable and non-tradable. That's, I think, the last question that I mentioned from the participants. We come to the end of the session because it's already, we start at 9:50 something. And it's almost 11:50. So we come to the end of the sessions for 2 hours because the two reasons. One, that we have to give time for distinguished speakers. They have another appointments after this. And the other reasons that I just realized that all the questions relate to the Islamic finance roles in development, that you are going to have 2 sessions tomorrow discussing about this in detail. So this session is actually not details on Islamic finance, a more macroeconomic perspective, more the global pandemic, global recovery. So sorry beforehand for speakers tomorrow. Some of Islamic finance we discuss in this session, but I think this is connected at the end of the way, by the way. So I would like to say on behalf of the Ministry of Finance, Republic of Indonesia, on behalf of the organizer, for your valuable time with us today for 2 hours full. Pak Habib Rab, really appreciate your time, Pak Habib. Pak Budi, Adi Budiarso, really appreciate your time, and Pak Riyad also really appreciate your time, and we know that you are around 3 hours behind us, so appreciate your time for this maybe still challenging time, starting very early in this morning. At the end of the day, at the end of the session, I mean, thank you very much. Really appreciate for your thoughts, and this is very good food for thought. And I believe that we really learn a lot. Don't forget, after this we have break, but after that we have call for paper presentation. That's also very interesting. So please don't leave. Still join with us. And remember, tomorrow we are going to details on Islamic financial sector, Islamic financial role in the Indonesia economy and the global economy as well. Again, thank you very much. I hand over back to the MC.
Thank you to Chair Discussion and all the prominent speakers for bringing us to a very productive session today. And now, Excellencies, distinguished guests, ladies and gentlemen, I'd like to read some announcements for the participants as a general reminder. We would love to hear your feedback on this conference. You can click the link at fiscal.id/5th-AIFC, available in the virtual room and the comment section of our YouTube channel, as you can see on the screen now. And once you leave this conference room, you will be directed to that link, and your insights will help our organizing committee to shape future events like this. And I would also like to point out that participants who fill out the feedback form will be eligible for a certificate of attendance. And you can also download all the materials presented in this conference to the link that is displayed on the screen.
Excellencies, distinguished guests, ladies and gentlemen, on behalf of the organizing committee, we wish to extend our gratitude to all our panelists, presenters, distinguished guests, and of course to you, all our dear participants, for your kind attention in today's conference. Allow us to remind you again that up next at 1 p.m. Jakarta time, we are going to have presentation sessions from our call for paper event. We would like to thank all the others who have submitted their manuscripts from June 25th to July 25th to 2021. We have received more than 200 abstracts and selected top 12 papers to be presented in this conference. All interested participants may register in the link that's displayed on the screen right now, and please click Room Call of Paper and choose your preferred session among the 3 available virtual rooms. We look forward to seeing you in one of the presentation sessions, which starts at 1 p.m. Jakarta time. This is all the time we have for today on the 5th AIFC. It's been a pleasure to be with you. We wish to see you again tomorrow for another productive program on day 2 of the 5th AIFC. Stay safe and keep well. Wassalamualaikum warahmatullahi wabarakatuh.